some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain. You're some kind of butterfly. Baby, you give me midnight.
Hello, hello. Okay, you can hear me. Good morning, everyone. Thank you for coming. And welcome to the fourth day, day 4 of the CEE Sustainable Finance Summit. Day 4, yes. I actually feel like I'm moderating a festival now after 4 days, which we actually could call it Sustainable Finance Festival, maybe Linda, for next year. Let's think about that. And I think you, especially people who have been here for more days or maybe who have been watching it online as well, you have noticed the pattern, what we're trying to do. We're actually trying to dedicate each day to slightly different angle, different sector and area of sustainable finance. And we went from policy regulations to banking and energy. And today we'll be focusing on sustainability in business. Sustainability in business, what it means exactly, what ESG means in practice, what it doesn't mean as well. Is it mainly reporting? Is it disclosures? What exactly is integrating sustainability principles into strategies and operations and products? And that's both for large and smaller companies as well. And this is a very, very close topic to my heart as well, because we do meet many companies, and I think we all know that not only in this region, but I think in Europe and globally, this is a big challenge now to understand and navigate all these changes of not only what it exactly means and how to integrate it in practice, but also how to leverage it for opportunities, how not to see it only as a challenge, how to actually use it for a competitive advantage. And these are some of the topics and some of the questions we are hoping to explore and answer today. And maybe without any further ado, because I've been talking a lot for the past 4 days, but just, you know, two more days to go. So without any further ado, I would like to invite my colleague, Karel Woldrich, to open this day with his keynote and maybe tell us more about your experience with dealing with this topic and working with companies. Good. The floor is yours, Karel. Thank you.
With pleasure. Thank you, Julian. Just, by the way, you're not talking too much, not only this week, right? Hello from me as well, and welcome. Thank you for coming. I'm Karel Woldrich. I'm head of industry decarbonization workstream in ISFC, and I spent my past 2 years by talking to industrial companies, industry associations, financial institutions about industry, and government officials, and we were talking about how to make business of production of hard-to-abate industries products more sustainable. And those are very hard to abate industries. So trust me, those conversations are not very easy. They are not the happiest conversations of my life. And I don't want to give you details of these conversations because they do get a little bit technical, and people do get bored after some time if they are not overly enthusiastic about chemicals, steel, and cement. But what I would like to do is to give you some insights that I have found out that I'm hoping might be transferable for your business as well, even though you're operating in another industry. By the way, how do I skip slides? Thank you. Pleasure. So if you are interested in those technical details, coincidentally and luckily, and it's not really coincidence, it's not really luck, this is very well planned, we are publishing our study on decarbonization of hard-to-abate industries today. And what we are doing is we are building a policy and financial roadmap. So we are trying to suggest some steps which would help to decarbonize those hard-to-abate industries. It's specialized on the Czech Republic only, so I'm hoping it will be very tailored. I see, based on the number of phones that I see, you understood that a QR code will lead you to a download of this study. So if you are interested in more details, feel free to download. I will wait for the phones to disappear. Okay, and if you want to see a copy of the study, it's outside, and you can reach out to me, and I will be happy to give one printout to you for sure. So what I have digested from my conversations are 3 elements of successful transition. I know that this is extremely simplifying topic of my presentation, and so these elements are quite general in order for them to be applicable. But I'm hoping it will still be some interesting insights for you because we did spend quite a lot of time of thinking about the common patterns that we see. First one is competitive advantage. What I hear quite often is you should view transition to sustainability as a competitive advantage. Sustainability will increase our competitiveness, and I was always wondering how exactly is that going to happen? Because what I see in heavy industry is that you have to pay additional money for emission allowances, you have to pay more expensive energy due to emission allowances, and you are subject to more regulation, which is of course cost as well. So I'm wondering where does exactly the competitive advantage, where does it lie? I think you need 2 things. First one is timing. What I hear quite often, you have to decarbonize as soon as possible, you have to cut down your emissions as soon as possible, you have to become sustainable as soon as possible. And I know it does make sense. And I don't want to be too controversial, don't get me wrong. I'm all for sustainability, but it might not be now that's the best time to decarbonize for everyone. So let me use example of heavy industry. If you are producing steel, currently you have the blast furnace, which is the usual one, which has a lot of emissions. One of the options that you can use to decarbonize is called electric arc furnace. Electric arc furnace needs vast amount of energy under a very high voltage. So you need a special power lines leading to your factory. with the high voltage to be able to put that electric furnace in operation. Obviously, if they would be investing in the electric arc furnace without having those power lines, they could just sit back, relax, and watch their power lines being built for years, and they could close the shop. So when you are thinking about transition to sustainability, it might be good not to it will be good not to rush the decision and to plan properly and to assess the situation properly. When is the best time to invest? It sounds basic, but I think that's something that's crucial for obtaining the competitive advantage. Also, you don't want to move forward too late because your competitors will be ahead of you and you will be lagging. Second thing you need is power. I don't mean electrical power in this case. I mean power to influence your customers that the product that you're making, the decarbonized product, is what they want. If they will not understand that, then you will not be able to place it on the market very well if you are competing with cheaper products that are produced in a carbonized way. Or it can mean power to influence your competitors, that they have to move in the same direction that you are moving. I have a good example of that, which is CBAM. We will be having a panel about CBAM right after this keynote. And CBAM is a regulation that's coming into force in 2026. And it will push importers into European Union from other regions to pay for emission allowances as well. So it will put the market straight, and the importers into European Union will have to decarbonize as well because they will be paying for their emissions as well. And this is a good example of the European Union using its incredible purchasing power to push other regions to follow the same regulations that we are following, which means that 27 different regulations, 27 different states is not a power. This is power. Our purchasing power to push the others to do the same things we are doing and be one step ahead of them. And second thing, and I know this sounds a bit cheesy and I apologize, but I have a good example of that, is cooperation. The transition to a sustainable business model is a major undertaking, and you will not be able to do it on your own. You need to follow up and cooperate with your partners, with your suppliers, with your customers, with your bank, to make sure that you are all on the same page and you are following the same target and you are trying to achieve the same thing. I have another example of that. It's not really from commercial business, but from commercial area, but it's from commercial slash, let's say, policymaking space. One of the substances that you so sorely need for decarbonization of hard-to-abate industries is hydrogen. I suppose we all know that. It's particularly for chemical and steel industry, you need vast amounts of hydrogen. Currently, the hydrogen strategy of the Czech Republic is insufficient in both its goals it sets and its level of detail it uses to describe the ways how to get to these goals. That's why Ministry of Industry and Trade is working on a new strategy. Historically, a lot of these strategies were generated in a way that it was document generated by policymakers and pushing something to the market, pushing something to the industry. This one is, or it's definitely not the only document that's generated in this way, but in this particular example, what's happening is there is very intense communication between the industry and the Ministry of Industry and Trade to make sure that this document is accepted by both sides, because that's the only way how to make sure that it's realistic and it's achievable. Otherwise, it will be just good for, you know, starting a fire or something. Third element that you need is leadership and strategy. Transition to sustainable business model is not going to be easy. You will have to change your business processes. You will have to upskill your employees. You will have to maybe change some suppliers which are providing the products that you're looking for. You will have to look for new market segments. So it is not going to be easy. And in order to get through that process, what you're going to need is a solid strategy and a strong leadership. Barack Obama, when he was leaving his office, he was asked, so what's your next step? how can you follow the most powerful role in the world? And he responded with a single sentence, which was you must have a strategy. And that's my point. At any single point in time, you must have a strategy what you want to achieve. You might find yourselves in a situation where when you find out that the strategy that you originally designed is flawed, you will have to change it. And you will have to, based on the changing circumstances, you will have to change the way that you're going. In order to be able to do that, you need someone who is bold, who is willing to take the risk of setting the strategy of failing and powering through when the situation is not easy. You will have to find someone who is able to recalibrate the strategy when it's needed. And when I say you, I mean we, because that doesn't apply only to your companies, where you will have to place the proper strong leadership, but also to our states. We will have to elect the proper leaders of our governments, of our states, to lead us through this difficult journey and difficult times, and successfully achieve the transition to sustainable business model. So in a nutshell, I think if we find the strong leaders, if we have a proper strategy, if we cooperate together, which is a good example for this summit, because that's exactly what we are trying to do, all of us to cooperate together, to exchange, to discuss from different sectors. And if we will manage to obtain that competitive advantage, I think that's then the transition to sustainable business model can bring us to higher level of competitiveness. Otherwise, it's not going to happen. That's it from me. Thank you very much.
Thank you very much, Karel, for the remarks to start the day and start the morning, which I think echo and probably are agreed and shared by many here when it comes to collaboration and cooperation, and actually sharing some knowledge. Because, and this is something we may be forgetting sometimes, is that suddenly sustainability and is, as you know, non-financial reporting. It's actually more non-financial topic and very much science-based topic and very much cross-sectoral topic as well. So it is about upskilling, it is about learning new things, and actually it is about learning and sharing knowledge across sector and across companies and trying to somehow navigate through these complexities together. But without any further ado, maybe just to mention, because Karel mentioned that the next panel is CBAM, which it's actually not. CBAM panel is at, I think, 1 p.m. So just to, I'm not sure if the moderator of the next panel got really scared now. But, so this next panel is still indeed on the European Green Deal and Fit for 55 and how can we go from that idea to action. So I would like to invite to the stage Martin L., the Chief Foreign Policy Analyst for Hospodářské noviny, who will introduce the panelists. So Martin, the floor is yours.
Thank you, thank you very much, Julian. So I would invite Ayla Kravis, Chief Sustainable Finance Advisor from European Investment Bank. Philip Kilius, Partner and Head of Sustainability and ESG from Mazars. And Eva Bučová, Head of Corporate Sector Coverage and Chair Sustainability Committee, ING Česká republika.
Good morning.
For the very beginning, yes, there is a Slido. So you or those who are watching us online, I was told that there are probably some hundreds. Welcome as well. And please, you can ask the questions on Slido under CEE Summit 2024, 24. I'm looking in advance a little bit, but we will be looking in advance, all of us, basically. We in Hospodářské noviny are looking at the problem of sustainability in the companies from the very practical side. And last year we decided to launch a Green Deal podcast where we are inviting the companies telling us about their practical experiences and as well trying to what we just recently called ourselves a Green Deal for home. Trying to, because there is a boom of solar, small solar installations, for example, in Czech Republic, and a lot of the users, me included, are trying just to on the learning curve how to work with that the most efficient way. So I am kind of support of the practical examples, practical attitude, and to Karel Vobořil mentioned the simplify. So we journalists are simplifying. So I will be asking simple questions, and I expect simple answers, please, or to those. Even we know that not only the world, but also this change is quite complex. And I would start with good news from the Czech industry, basically, because yesterday we have had elections of probably the most powerful industrial lobby, Confederation of the Industry, of the new leader of that group, and Jan Rafaj, who was elected, is on that side we would call the pragmatist of pragmatists, who is also like on the critical side saying, okay, we would like to have a different way, but a Green Deal is a reality and we have to adapt to that. So I think this is the kind of Czechish approach to almost all problems we are solving, from politics to daily life and the families. So let's start with the practical question to the banking sector about which sectors in European Investment Bank you see as a kind of the most promising in terms of change we are going, or we are already living through, what are the best options and opportunities of operationalizing the EU Green Deal into practice?
Thank you, Martin, and good morning, everybody. And thanks for the invitation. I think it's for somebody as large as EIB, it's a tough question. I mean, we are operating on almost everywhere where we can see a chance of this transition and promoting the Green Deal. I mean, the Green Deal, from where we sit, we are supposed to be focusing on sustainable infrastructure. That means energy, traffic, everything, or transport, on SMEs, which is not only about green, but also about digitization, skills, etc. So these are typically fields where we work quite a lot on. But if we talk about Green Deal in itself, of course, we will have to work on the hard-to-abate sectors. We will need to work on energy. And energy is not only a question of greenness. It is actually a big competitive advantage if it is done right, because I may be straying a little bit, but so this doesn't qualify for simple, but this is important. Our economist, chief economist team does every year an investment survey, and they found out in the answers that three things are sort of impediments for European companies for their investment plans. And that's a general insecurity, which is, to translate, the horrible war just next door. Short term, there's little we can do about that, it seems. There's shortage of skills, but then the third is price of energy. And this is something where we can do something, not overnight, but fairly rapidly, I think. So if we invest in renewable, clean, and domestic and independent energy, this is something where we can create much more visibility and much more predictability in terms of energy availability and its price as well.
And after the last year, everybody understands that.
Yeah, yes, yeah, exactly. So Europe and its companies who are investing should not be dependent on the whims of some dictators in the East or in other parts of the world, for that matter, but they should be having reliable and affordable, independent energy. So I'll stop there and we'll continue later.
Philip, what from your practice are the kind of best examples so far of business using the opportunity, as we said, right timing, right strategy, right leadership?
Well, sustainability is definitely key to success for companies. So it's no longer a nice to have, but a must have. And there are lots of companies, which serve as a good example, who are dealing with sustainability, not only treating it as a risk and threat, but also as an opportunity just to move forward, because it's not only crucial for their license to operate, but it also can be used as a competitive adventure, as a USP, and also to move forward. And the EU Green Deal turns out to be the man on the moon moment or a game changer for companies, because of course companies have to play an important role in fulfilling all the targets set by the Green Deal, not only when it comes to reducing the carbon footprint or cutting down CO2 emissions, but also when it comes to such topics like circular economy or biodiversity. And some of the companies have really adopted to it and are some kind of first movers. So they accepted the challenge and they see, you know, as soon as they comply with all the regulations, they will be the ones who lead the market. They don't have any problems with their license to operate, but they also can define maybe new products and services which are more sustainable when it comes to energy consumption or noise reduction or any topics, and the market is asking for it because it's not only demanded by customers, but it's also important for business to business, because more and more companies along the value chain will ask for more sustainable products. But it's not only about products, but it's also about, you know, a change of mindset in the C-level of companies. So not only in the workforce, but they have to, the C-level has to make the decisions that the company becomes more sustainable. And this is more or less underpinned by all the regulations which comes with the UN Green Deal. We do have the Corporate Sustainability Reporting Directive coming into force within next year. This is all across the European Union, all across Europe, and they have to comply, companies have to comply with the requirements. So it's not only about non-financial reporting or setting data for environment, social, governmental issues, but it also is that companies have to set up organizational structure for sustainability. It's all about due diligence processes. It's about setting targets in the field of sustainability with clearly defined KPIs, action and measures. And of course, the stock-listed companies, they are leading the market, but the CSRD is also relevant for the mid-cap companies, for all the hidden champions, global players of medium-sized companies, family-owned companies. And there are good practices where, you know, the CEO decided, okay, we want to be a first mover, we want to lead the game, and that's why they reallocate all the resources. They do report on sustainability, they have just the right workforce, they have sustainability managers in place, and it's closely linked to the management structure. So sustainability is no longer just a department which is not linked to the financial office or to the human resources department or any other place. So that's why it's important for companies to be there, and there are lots of practices or good examples all around Europe. It's not only the big players, but also it affects most all companies which are doing business.
Eva, Czechs, not only Czechs, but Slovaks and among the region, this is not the most popular topic. We have organized our first Green Deal Summit last year, and we have had demonstrations from left and right as well, because of the sponsors from the left and because we used Green Deal and we invited Euro Commissioner Frans Timmermans to that. So I see kind of, you know, unpopularity of this topic. What are for you as a banker in the Central Europe, the main challenges dealing with this in Central Europe?
Mm-hmm. We have been dealing with it since 5 years very proactively, meaning really speaking to C-level and trying to explain the benefits of the transition to our corporates in all the sectors, not just those who are emission heavy, but also to others, because at some point everybody will need to transition. Over these 5 years, there is a huge change in the attitude. At the same time, it was actually speeded up by two factors. First was definitely COVID crisis, and the second one, EU taxonomy. And actually, EU taxonomy is giving a very good engine into that, because it teaches the companies how to deal with data, how to learn to collect the data within their corporates and the whole conglomerates, and at the same time also see what they can do actually with this data and how they can compare to their peers. And this is what we are trying to bring to their daily practice, really bringing examples from the globe across all the sectors, how it can be done, how the transition can be really done, because in every industry you have already leaders. And I think Karel said it very nicely today. It is about what is really relevant is timing, because indeed this is what we see. Some industries and sectors are immediately ready. Some industries and sectors really need a lot of time and a lot of steps to really transition step by step, and we are trying to help that. At the same time, the EU taxonomy is just ground zero, and this is what we are trying to explain as well. If you believe that you are swamped already by EU taxonomy regulation, it's just ground zero, because it helps us actually just to introduce transparency, so that we know what we are doing, so that we know what precisely is sustainable and what is called sustainable in this world. And all the rest will only follow, and Green Deal is a very good example of really working or introduce regulation, but that regulation needs to be understood, interpreted well, and it needs to be implemented well. And this is what we are struggling with here in the region of Central Eastern Europe. I think we need a bit of more help. We need to get used to the fact, and Karel also mentioned it today, that we need to create alliances. We need to cooperate. Although many also, when talking about financial sectors, obviously for every bank it is a kind of a competitive edge. At the same time, we have also shown a huge level of cooperation under Czech Bank Association when we sit down at one table, 16 banks, and really try to find the ways how to ease actually the situation for the corporates via introducing the ESG questionnaire, because we want to guide them also going forward so that they first know where to start, where to continue, and what is expected of them from the banking sector. But banking sector is just in the middle of the whole transition, and it actually reflects all the stakeholders' demands. So from that perspective, when it will be required by the banks, it will be required by the whole society. So this was the first step we have done. Now we are jointly going through EU taxonomy step by step and sector by sector in order to find proxies, how to actually gather the right data, how to guide our corporates to really supply the right data, and next to that also how to effectively have comparisons. So, and the next step is obviously stakeholders being the public sector, various ministries, where we are trying to really bring pragmatism into the way how the regulation is being implemented and change the passive approach into proactive approach or active approach. Because the worst what can happen is that we are just reacting to what is coming and our voice is not heard. And this is what we are trying to do in initiatives like Změna k lepšímu, because many banks have actually established Změna k lepšímu or were standing there at the beginning, because we believe that if there is missing role of the state, because as Karel mentioned, leadership is missing, then obviously somebody needs to replace it. And we believe it needs to be the pressure from all stakeholders. And that's why initiatives like Změna k lepšímu. Hopefully I responded at least part of your question.
Well, I would stay with you for a while. You know, who would take that leadership, politicians or industry or somebody else? Because we see quite active NGOs on that side. Mm-hmm. Politicians are, at least in Czech Republic, quite afraid to take this mm-hmm. leadership, because this mm-hmm. is the popular, not the very popular question in terms of, you know, how much votes you can gain out of that. So where would you, or maybe a question to all three of you, you know, where this leadership should come from? Mm-hmm. Eva.
Yeah, I was sorry. I was just going to continue from what Eva was saying, that all of this Green Deal, green transition, all of this, if we talk now about corporates, because I think we are in the business day today, it's not just meant to annoy you. I mean, the reporting side, I'm sure it annoys a lot of people because it is complex, there's no denying that. But the actual rules that are being created, the Green Deal, the targets that are being announced, there's lots of numbers, so and so much by so and so year, and all of this. But this is meant to help the business, because the world is changing. Whether dinosaurs like me want it or not, it is changing. So governments all over the world, they are seeing, irrespective of their political color, they are seeing the cost that the climate change is causing them and their countries. We have wildfires, we have what is it now, inundations, and we have horrible disasters, natural disasters, droughts. Let's not talk about the temperatures that even Southern Europe has seen this week. So we start to see the cost. And then for private people, for the consumers, again, people of my age may not care so much about whether they get plastic straws or not with their fancy coffee, but the younger people start to care a lot globally. And corporates are exposed to more and more requirements on transparency of their businesses, what they do, how they do it. So this is a competitive edge. Being a greener and being better at sustainability is a definitive competitive edge for your business. whether you are national or global or regional, it is going to help you to be more competitive. So it's not just meant to annoy you, it is actually a help. You may not see it immediately today, but this is the point. This is where we are going to.
You just ask, where does leadership come? And the good news is, there has been, a change within the companies. I've been doing sustainability for the past 20 years, giving lots of audit-related services or strategic advice to companies. And when I started my professional career, sustainability was, just something which was not of much interest, and maybe there was one guy or lady taking care of it, and then all of a sudden a sustainability department showed up. But meanwhile, sustainability is just linked to the C-level or within the chief financial officer. So it has become definitely more professional, so it's no longer just more a marketing thing or something for corporate communications. And because it's linked within the financial department, or it's got a close reporting line to the board level, that's why it's treated in a very professional way. There are lots of resources, there are qualified people all around, and the C-level is fully aware that they do have to be sustainable, because they do have some kind of pressures, not only from the government, but also when it comes from the capital market. Of course, investor relations or investors and banks will ask for ESG, and they have to provide lots of information. It's closely related to their remuneration, so it's dependent, salary is dependent on sustainability, and that's why they decided, okay, it's a top priority and we have to do something about it. And when we do spend money, then we want to be more than compliant, because the market asks for it and also the workforce asks for it. So we do have still the war of talents, and especially, it's very important for recruiting and retaining people, because generation Y and Z, they will ask for purpose of the companies. And in order to get the most qualified people, you have to be sustainable. So that's why the leadership has decided it's a top priority. And once this has been done, then it's pretty clear that they will just do it in a very serious way with all the needed resources.
About leadership.
Yeah, in terms of leadership, in a most ideal scenario, leadership comes from the business. At the same time, the business has to have a framework which is supporting the transition. And this is something which we are trying to build now. Because business, indeed, we had sustainability efforts from the business on the back also of other stakeholders, as you mentioned, and NGOs, think tanks. However, the business itself can do a transformation only up to a certain level. And when they reach the maximum, they really need all other stakeholders to join the game. And this is what has been happening. That's why the business momentum for sustainability was not that quick and not fast enough, because it really needs cooperation of all the stakeholders. So now we are there. Green Deal is supposed to introduce such a framework, the global governments, the local governments to really implement it. At the same time, now also involving a financial sector, because obviously somebody needs to finance the transition. And it's not just multinational money, but also national money in the form of loans. At the same time, what we see in terms of leadership, what is very relevant is that at the national level, you know where you are heading. And obviously, we all have now ambition, 55% reduction in 2030. At the same time, it's not enough just to have this target, because it's too untouchable. For example, what we are trying to do is to establish sector policies, because each sector contributes different way to the overall emissions. And ESG is not just about environmental, it's also social and governance, which is being forgotten a little bit, because obviously the major focus is to cut emissions as soon as possible. So what we are trying to introduce is exactly the leadership now can, to a certain level, come from the banks. And it is coming from the banks now, because all the regulation first hit the banks, and now it's translated into the entire economy. But then, of course, you have also corporates and state. And this is, and when you asked me at the beginning, what is the major concern? First is obviously a negative attitude towards everything which comes from Brussels and from the European Union. So, but I think we are dealing with it on the back of the energy crisis which was here. I think largest part of the population really understood why is it important, the transition itself. So that's one thing, although it might always just stay in energy, but lucky enough it's not the case, so it's translating into other parts as well. So that's one thing. And second thing, it's, what was it? Is obviously fear. Because it's the transition which we are going through now is about changing everything what we do. It's about redefining business models, it's about redefining the way how we live and how we do business. And I think this is something which really creates a lot of fear. We are not used to work in an unpredictable environment. And now transition brings, although it is a competitive advantage, we all say that, but what is behind is also a huge amount of unpredictability and uncertainty. Just a couple of examples, and I think Karel mentioned it, in the industry. Yeah, if I'm a steel producer, okay, I decide that I invest into the electric arc, but there are many other things I need to do other than the electricity or power in general. I need to redefine precisely the way how I'm working, because then I need to collect steel from the market. There is no infrastructure for that. I need to create, if I want to be a leader in that industry, I need to create the whole ecosystem from the scratch. And this is what is creating the most hassle and hesitation, because it really takes a lot of time, effort, thinking, and what I have a feeling is missing is to sit down, science, business, and regulation at one table and along with finance. And the science as such, I'm missing here, in Slovakia, Czech Republic, and in the region itself. Yeah, because we are very science-based people, so we are looking for science to effectively confirm that this is the right thing we are doing, but we are not including science in strategic decisions of the state.
We have seen that during the pandemic, for example.
Exactly.
From the Brussels are not coming only regulations, but also money. EIB sitting on the big pile of money. And usually the Czech, I'm speaking with the Czech or Slovak or Polish entrepreneurs, or basically big companies from energy sector mainly, they are kind of complaining, yes, Green Deal, yes, but we need a lot of money to change all that, because we are the most industrialized economies within the EU. Can we expect from EIB some kind of preferential treatment in terms of financing the Green Deal projects in the Central Europe? Yes.
Well, I think there's a lot on the table. There are a whole host of different programs, which I'm not even the best person to go through all of them, because there's so many of them. But in principle, there is the Commission itself who is lending to governments or under the different programs, New Generation EU, where 1/3 is supposed to be going to climate and environmental investments, and that, depending on the country, the cost is quite interesting and all that. Then there's, for example, a program like InvestEU, which has several targets, but I think all needs to be going through the filter of environmental sustainability and social sustainability. And that is a very big program. I think it's targeting almost 400 billion of mobilized investments in the EU over 10 years. So it's approximately the same size as the US Inflation Reduction Act as well. And that EIB is the biggest implementing agency there. 75% of that program should go through us and 25% through a number of other usually national promotional banks. And this is money that it's not subsidized per se, but the cost is quite efficient because it comes through sources who have a very good cost of funding themselves. But there is another advantage there, which is, I think, not that well known, and which I think is a huge advantage. There is a big pocket of advisory and technical capacity building that goes together with it. And it's not just the traditional MDB, technical assistance, I'm telling you how to build this bridge technically, I'm telling you how to build this, power plant technically. It's much wider than that. If you think about the public sector, for example, can take examples from public and private sector. So it's about, it goes on about helping you with sustainability or feasibility studies, with the stories that you need to be telling about your governance, what you need to be telling as your credit narrative, preparing all kinds of material, and even as much as helping you to select consultancies, because they are needed in many of these projects. It can be about well, there's so much, but it's much deeper than just the technical assistance. It is really about everything. It's about how to find ways of doing your project, your investment, so that it satisfies the European sustainability criteria, which can be a jungle, and I think this is a very valuable help. In that sense, European institutions are probably at an advantageous position to give this help because they know this themselves. We need to apply those rules ourselves. And one very important thing is how to best use or get to use the EU funds, because there are EU grants, there's EU blending of grant money and loan money or equity money, whatever it is. We have all the financial instruments going from senior unsecured or senior secured loans going to equity and everything in between. So the instruments are there. There's risk sharing, there's different levels of risk that one can take, but I think one should not think about this technical assistance and this advisory only as very narrow, technically focused support. It is very, very wide and goes from everything and can actually be money-wise, financially important for you. So we did, for example, in the public sector, we helped the Romanian government to review and revise and renew their health sector. And there we helped with exactly this feasibility study, with the governance, with the implementation of the plans. We helped I can't remember which country, but it is only this region, which was producing recyclable textile fabrics, how to do this project, how to implement it, how to put it all together to make it bankable, and then also how to find the best ways to use the EU funds that are available for such enterprises. So it's a very big network of financial instruments and non-financial instruments that are out there, and you really should use it, and it's all available there, both for private and public sector. I think this is another thing that people don't always very well understand about somebody like EIB. We are not there for public sector only, we are there very much for private sector. I think we do at least half of our business nowadays with private sector. So just come, and there's a lady of our Prague office, head of our Prague office here, and she will employ everybody necessary to help you with those questions. So I think this is very important to know, that you do need this help probably wherever you are, but it's available there.
But I would stick with my question in the sense that this region is going to be hit by this change particularly hard because of this industrialization and old industry share. Can we expect some kind, not only from maybe from EIB, but also from the other European institutions, kind of, if not preferential, then some kind of special treatment in terms of, how to understand, all the, because what you just described is a part of the big jungle where head of owner of the or manager of small SME company cannot kind of understand, so he needs advisors to that. So again, saying, okay, there are money in the Brussels, but I don't understand how to get them, so I have to hire an advisor who will charge a big chunk of this money, so why I should do that?
Well, that's exactly what the advisor is doing, for example, telling you how to get access to the best use of EU funds. So direct subsidy, for example, on its loans, EIB doesn't do, but we do, for example, risk sharing at the different levels of risk. Those levels that we do this at, I think, are more favorable than the purely sort of commercial actors would do. These grants are available for different areas and for different cases, but you may need advice how to get to them and what you can get. And if you are sort of eligible, what conditionality do you need to meet yourself or your project needs to meet in order for you to get there? So all of this is very valuable. It is actually worth money in concrete terms, but it's not money that is given to you like this from pocket to pocket. It's a very valuable advice which comes really for free. So there is, like you said, there is support, but you need to know where to get it, how much you can get it, you need to know what you need to do in order to get it. And this is something that we are also offering.
Philip, the question from the practice. When I was recently speaking with one manager of one small Czech company, and he was saying, question on ESG, he said, well, this is another paper I just have to fill, I have a lot of other work to do. And if it will be like 2026, and I don't know if I will be here and the company will be here, then I spoke with another owner of the middle-sized company. And he was saying, we are a family company, so we are trying to introduce it on our own because we like it. and then translating it into the business side. And I was quoting the owner, I was just talking with the bank on this topic, and it looked like that we both are learning how to work with that. So where we are on this learning curve, from your experience from the company side?
Well, yeah, there are lots of things to tackle when you want to be a master in sustainability. But the good news is that Rome wasn't built in a day, and it goes the same with sustainability. Sustainability, the implementation of sustainability in a company is a journey. It takes years, and that's the good news, because even the European Union does not expect the companies to go from 0 to a hero when it comes to all the regular obligations or the Corporate Sustainability Reporting Directive. It's just important that companies will start their journey, that they will start to define their material topics in the fields of environment, social and governance, and based on that, they will start to report, and they will define their KPIs, their targets, and their measures. And then they have to include it within the reporting. But the government and even the auditors, they don't expect all the information as long as companies are transparent and credible, as long as they can prove that they're on the way, that they're on their journey, that they have started to reallocate the resources, that they have started to implement management systems for environment, for energy, or that they have just maybe hired people for dealing with sustainability. This has to be included in a report, and then you have to demonstrate some kind of continuous improvement over the years. And then you do comply with all the regulations. And sometimes whenever I go to companies who have to report, thanks to the CSRD, because according to the CSRD, companies with 250 employees on average, 40 million turnover, have to report on sustainability. And this is a game changer, because all across the European Union, we do have over 50,000 companies who do have to report on sustainability. There are lots of companies within the Czech Republic who have to deal with it for the first time, and then they will say this can never be done. And we do have pressure from the banks or from our investors, because they ask us lots about sustainability. Of course they will do, and they will ask more and more questions on a yearly basis, but you have to start. And then when you do struggle with sustainability, then it's not a shame to ask someone else who could help you. Of course, there are external auditors and advisors out there, but there are also very qualified people coming from the universities who've been studying sustainability for a long time. And then when you join forces with all your departments, then you can just accept the challenge, and then you will succeed. Because what is most important, companies have to realize that it is something which has to deal with the entire company, so you have to include all your departments, not only finance or the strategy, but also it's an issue for human resources, for product development, for procurement, for IT, and all these people have to work together, maybe for the first time in this special setup, but then, then you will realize that it is not that difficult. That's, key to success.
Mm-hmm. We hear quite a lot that there is a pressure from the banks, but also banks are also learning. So where on this learning curve are the banks? How much work we should do on this?
We are trying to do our best at Czech Bank Association exactly to speed up this curve so that all the banks are on the same page. But obviously when we started, there was a huge gap between the banks. Many of the banks, the international one, have committed already in 2016 to minus 2 degrees or to 2 degrees maximum warming. Now it's 1.5, and almost all banks are committed to net zero. However, obviously one thing is the commitment, the other thing is really coming from pledges to real goals and to real work to be done. And obviously what the banks are trying to do, and on the 3 areas, first, decarbonize themselves. Obviously we are not industry, so we don't emit so much. However, we also need to take the leadership there. We need to calculate our carbon footprint, and we need to figure out how to actually limit it, just like any other corporate. So that's one thing. Second, what they are trying to do is also engage all the employees, because sustainability is a behavioral change, and you mentioned it very well, that it includes all the stakeholders. So this is what we are trying to do as well in various ways, so that it's not us on the top level, but it's also every single employee of the bank knows what sustainability for the bank means and what does it mean for the corporates. And then the second pillar, obviously, is our clients. How can we help our clients is first share our example of how we did it. So that's one thing. How did we engage also all our employees, and how did we put them in one room and at the same table? How did we align their interests? And obviously, we can share best practice from overall the world as per the sector, how the decarbonization path can be done. And particularly for our bank, we have introduced so-called Terra approach, which is an actually open platform for all the financial institutions, where in the most heavy sectors, in terms of emissions, they can effectively screen their portfolios and see what could be the net zero path going forward, and how should they start behaving towards that particular sector and helping it transition. And I think very similar to what we heard from Karel Woldrich, we have also issued a number of principles for sectors like steel or cement or marine, where we are introducing exactly the entire pathway, what needs to be done from end to end to transition. And I think this is the help we can really provide, and obviously finance the transition. So that's another point. And on top of the funds which are available from institutions like EIB or from national or international public funds, we can effectively make a more friendly financing in terms of trying to translate the good and right behavior into reduction of margin. So you have then green instruments and these behavioral instruments or transformational, which serve the transition itself, which are general corporate purpose loans for corporates, where we implement certain KPIs, meaning ESG types of covenants, where effectively corporates commit to simply fulfill these covenants over the time. For every period in that time, which is usually 1 year, we agree how do they progress on these particular covenants, and if they fulfill it, they get reduction of the margin. So that's the utmost we can do, combine the advice together with a better financing condition. But please bear in mind that the banks are not getting grants for that. They are really putting it on behalf of their P&L. So from that perspective, we are also not getting better regulatory treatment. It is about us really reinforcing the transition itself and believing that this is the right pathway for the entire economy. And each bank has a different advantage which it can offer. So you cannot say that you have a general one. And for green instruments, I think what is the experience on green bond market, for example, is that financial advantage does exist because the investors like the purpose. They are then more willing to compromise on the price. They are more willing to compromise on the tenor. So it might be, it's not a guaranteed advantage because it always depends on the behavior of the market and on the situation on the market. But since that number of years we have been doing it, it's more than 12 for green bonds, it is proven that it is there.
And before I ask my last question, I would just warn audience that you can prepare your own questions. I would stay with Eva. Is it possible to say that there is, in Czech Republic and Slovakia, there is a growing demand for the green instruments, or is it just, a result of push from the regulators or banks that you need something green in your portfolio? Or basically, question is if the Czech, Slovak businesses are more aware that they need to work with these 3 points. Karel described the timing and the strategy.
Mm-hmm. You have both sides, obviously. At the same time, what we see more and more is this intrinsic motivation, because the last 4 years were really spent on raising awareness. And also the criteria on the market are rapidly changing, so they are more and more strict. And now when the companies see that it is quickly evolving, they are coming much faster back to us, because obviously 2 years ago you could have a KPI-linked loan without big struggle. Now you have to have an ESG report, ESG strategy. You have to really have a history of the measurement of the KPIs, and you need to have the KPIs audited. So also the requirements of the market are heavily changing. So from that perspective, they need to have a certain level of preparedness. And given the fact that there is EU taxonomy already introduced, there is already data mining phase very intensely either here or behind us, and we are really getting to a stage where there are clear ESG strategies defined, and they are even verified, and there is already best practice in other countries or with other peers what KPIs they are effectively selecting and what they are reporting. It is much easier now for them to really have the base, the comparison, and now they know what are the borders, what are the expectations. So for behavior, I must say that in the past we saw rather green instruments, particularly real estate, particularly energy, because it was relatively easy to define, and it was, and now it is also much easily fit into EU taxonomy. But the behavioral instruments are now, for example, since last year already much more frequent. So companies are, as they are transiting and changing, they see the benefit of having really that push from the bank in form of KPIs and of the public as well. At the same time, these KPIs help them to get better ESG rating. They help them to transform the company culture as such. And next to that, they also gain on the financing. So behavioral instruments are now, and also when you look at the global financial markets, very similar size than the green instruments.
On Monday, we have heard how hard it is now to get some reliable data on these new fields.
Mm-hmm. Yeah.
Any question in the audience? Not yet. Okay, so I will go with my other question, which was. When you introduce some kind of new technology or new product, you have to create demand if you want to sell it. So we saw it with the Apple phones, for example. How to create on different levels the demand for this change, to have it not only regulatory-driven effort to make our economy more green, but also to have it as a kind of demand-driven, either from consumers, from people from the companies, and I don't know who of you mentioned that also the new employees or new young generation are asking that if you want to work for some company, you want the company fulfilling some criteria. So where do you see the state of the demand for the greening economy? Let's start with Ayla.
I think that's an excellent question, and I think this is exactly the way one should see the situation, and what I was saying earlier, that this can be a competitive advantage and turn into such. You just have to rewire maybe your brain. People see often digitalization efforts in being something that we can develop things and do new business and do more efficient business and have maybe higher margins, but somehow this greenness is not yet seen in the same way. I was reading earlier this week an interview or comments from a European company who is producing, the film that you put on top of the solar panels. And they were asked whether they would, for example, think of transferring production into the US because of the IRA and the subsidies that they are promising there. And they said, probably not, because what they do here, they have geared up their production now to the European standards, which are the tightest in the world. And when they have that, they can sell their product anywhere. If it's okay with European standards, it's okay globally. Everybody can buy it. Whereas if you go somewhere else, you may need to have different product for this market, for that market. It's best to go with the tightest standards, and it's okay for everybody. This is what some academics have called the Brussels impact, i.e. you can actually turn the regulatory tightness into your advantage. You abide by the tightest standard, it's fine with everybody. I think this has been seen in for example, in the the product that you use as an alternative for mother milk. I don't know what it's called, milk surrogate or something. So this is where EU has strictest standards. If you produce it by the EU standards, it's fine everywhere. Whereas otherwise, if you produce it in Asia, it's not probably good for the European market. And so this is something that we have to start to see as an advantage, that our standards are actually a competitive advantage. But I think people see this green somehow, it's something that I need to resist. It's not done just because somebody wants it, though. This is a political agenda. This is about competitiveness. And any investment you do now should be done in that way so that it is part of this green transition, whether it's an SME, a big corporate, whether it's a government. We are already in the EU, we have a big gap compared to the US, for example, in terms of investments. And this is since 10 years, this is not something new. And they are probably going to see a boom now with the IRA and with the quite efficient tax breaks that they have introduced there. So we should really see this now as a competitive advantage and start to invest. And if you are investing already, then gear up your investments so that they satisfy these criteria as well. So that's my message.
Philip, demand side from your point of view.
How to create demand that is a good question. I think we have to differentiate between the different sectors. So when you're, producing consumer goods, there are lots of people who embrace the lifestyle of health and sustainability. So they're willing to pay maybe some kind of extra money for sustainable products with, a clear, path to sustainability where you pay, along the value chain, money to the workforce in less developed countries. So that's part of the business. Of course, within the real estate sector, it's all about green building. So for companies doing project development, so it's almost impossible to sell maybe any properties without highest green building standards. So there's the demand already existing. There is the demand provided by the public sector because companies have to prove that there is sustainability, otherwise they will not win the contract. When they do not have any ESG reporting, do not fulfill any ESG targets, they're out of business. So there's already demand created. And when it comes to business or industrial products, of course, business partners, the OEMs will ask their suppliers to provide the latest technology when it comes to energy consumption or noise or any other issues, because they have to use that kind of machines within their own production, thanks to the EU Green Deal or the environmental targets set for Fit for 55, because energy reduction or cutting down CO2 emissions is just something which is relevant for all the companies doing business within the European Union. So within the European Union, I do think there's demand for sustainable products and services. But on the other hand, of course, it's not only transforming your business model as a company, you have to think where you want to do your business. Because in a globalized world, there are still markets, maybe in Asia or in the Americas, who do not have the highest standards for sustainability. And this is some kind of strategic decision. Of course, you can also try to sell your conventional or your standard products in these countries. But in the long run, all these countries all across the globe will stick to the European regulations or to higher standards in the fields of sustainability. So that is only a matter of time that demand for sustainable products and services will affect every company in Europe.
Eva, do you have a special recipe for demand? Because we have quite interesting questions in Slido.
Let's go for the questions.
Because, speaking about SMEs, this is because now the new regulations are already good or fit for big corporations, banks. We have a kind of a schedule, and when you speak with the people from the small companies or middle-sized companies, they say, well, it's too far away. But should really, and we have a question here, what are the specifics of SMEs in the CEE region for which the transition may be more costly, eventually even more challenging than for the corporates? Or put it through the other side, would it be advantage for the SME to do it now, even if it's not, demanded, to have a future advantage, improve the competitiveness in the future?
If I may, I would react, because under Změna k lepšímu, we are really looking into SMEs and mid-caps a lot, although we as a bank here take care particularly on the Czech market of large corporates. At the same time, we believe that given the fact that they are transitioning now and they are getting that knowledge, they will also set certain rules for the CEE, for SMEs and mid-caps who are in their supply chain. And that's important because SMEs and mid-caps believe that the regulation will hit them later, but effectively, I am afraid it's not going to be the case. because the big corporates will need to simply make sure and be responsible for the sustainability in their supply chain. And the demand for SMEs and mid-caps to transform will be much faster. So that's one thing. And who will have the biggest problem? Obviously, every SME and mid-cap who is supporting businesses or big corporates who are in the emission-heavy sectors. So that's one thing. And second, their business models might be not just redefined, they might be completely changed. But that doesn't only go for SMEs and mid-caps. There are big corporates who are transitioning completely because their business model in 10 years' time or 15 years' time will just not be there. And I think this awareness is something, and this realization that really this transition might lead to my business not being existent in 10 years is something which we really need to push. Because this is exactly why they need to start thinking about ESG and starting implementing it already now. And under MENAG Lepšimu, we have also done an ESG course for SMEs and mid-caps who are part of the supply chains, where all these big corporates are sharing their knowledge, and they are already introducing what criteria they will have for the supply chain. So this course is already navigating them through all E, S, as well as G parts. And we are aware that SMEs and mid-caps are lacking the human resources as well as financial resources. So support of the institutions like EIB is obviously, in terms of advisory, very much needed. And other forms of supports are being developed as well. And that is in the run.
But how to get out of that situation that, you know, the owners or managers of SMEs are supposedly having kind of a fear or feeling that you big corporates plus Brussels is imposing on us something which can destroy our business model at this very moment. So how to talk with them?
Mm-hmm. Well, you know, I can feel a bit, I talk to a lot of companies who are just facing all the new regulations of the European Union or on a national scale in the Czech Republic or other countries, but fear is never helpful if you want to tackle all the challenges which are there and you have to overcome. That's why, of course, you know, the owner of a company, some of them, they threaten, you know, just to say, we want to shut down our production, we're going to leave the European Union, we do our production somewhere else where there are no laws in place, but, you know, this is pretty short-sighted and it's not a real option. So that's why we're going to tell them, listen, there are regulations in place, we are part of the EU Green Deal, and there will be lots of regulations, and you can't avoid them because you're part of an international value chain, and the corporates and the government will ask for that. That's why it's always a good idea just to show them, as I just mentioned before, it's a journey. You have to start. And of course, it's some kind of investment, but it's not the way that you have to start, and then you have to implement your sustainability within a couple of weeks or months. It's something which takes years, and then you can just, you know, think of how to do the investment. And as long as you demonstrate to companies, to the government that you're on your way to sustainability, that you start to report, it should be fine. But of course, SMEs have to play their part within sustainability, and there's no way out. And you know, the time has gone forever that you can't take care of any sustainability issues. You have to take care of your environmental data and your social issues. And of course, you have also to implement some kind of governance, which is in accordance to all the regulations within an SME. That's the way it is. Mm-hmm. That's the challenge we are all facing right now.
We have a direct question for Ayla and Slido. Mm-hmm. Invest in You and its advisory hub is far less accessible for CEE compared to most of the old member states. Are steps planned to be taken in this respect by AEB?
Well, I think that should not be the case, definitely. It probably is the case that the old EU countries are much more, or people there, companies there are much more familiar with these things and have done it already before and know what to do and what are the steps to take. But we have, I would say that we have, for example, an office in all the CEE countries. Please go and talk to them. They will be happy to guide you forward how to get there as well for the country, for the companies in this region. There should be no difference between any member country, small or larger, Eastern or Western or Southern or Northern. That should not be the case. Can I answer something about this EU taxonomy pushing for the green tech as well? I think now disappeared from the screen.
It disappeared from the screen. I was exactly trying to.
Yeah, yes. Yeah. Just to say very briefly, there was Ian, who had asked the question that is the EU taxonomy not pushing too much business towards green tech and tech in general instead of the heavy emitting sectors which need to improve? Well, the taxonomy doesn't really push anything, it's just information basically, but I think that I agree that there is far too little focus on the heavy emitting sectors, what should be done about them. And yes, it's true that many of them can never become green per se, but they can certainly improve so that they go into, let's say, an intermediate space, which is where we can live with them in the EU taxonomy language, where they do no significant harm. They are not an impediment to the decarbonization of the rest of the economy, at least. So, but this is a part where there has been far too little attention paid, and we don't have definitions. So if you are a heavy emitting sector, you know that you can't go all the way to green, then you are left there wondering, what should I do, where should I go? And I think this is something that legislators, regulators should really focus on urgently to provide some more guidance here. Where do you need to go? You can't go all the way to green. Where do I need to be? We call this at the EIB, we call it the amber transition, i.e. you get out of the brown sector, you become a middle ground. And that is something that, or intermediate transition, this is something that we do need. I totally agree with Ian there. Thank you.
We have quite interesting question, but it's for somebody from the Czech National Bank. Would some of you would like to step in?
I would probably
okay, so I will. There is a example from the Hungarian National Bank, which provides capital relief for the green investments. Shall it be a way for Czech National Bank eventually, or European Central Bank too?
There are obviously countries where it does exist already. At the same time, after having really numerous discussions and already a couple of years, not just now, the willingness doesn't seem to be very much aligned with the green focus, particularly because there is no underlying data proving that there should be a capital relief for something which is green, because the risk is the same as any other. At the same time, some of the banks indeed have a history of calculating events of default over a very long period of time, where they can prove that the sustainable companies who invest into sustainable practices and technologies obviously are more resilient. So we are trying really to have this dialogue, but in some countries it succeeds, in some not yet.
Interesting question, which is connected with the kind of shift not only to the green, but also to the digital technology. Do your institutions have a strategy for funding the transfer of technology from the universities and research organizations into products, which is basically, I think, the pain in the Central Europe, how to connect academia with business? Do you have any specific, not only like programs or strategy for that, or advice, maybe from advisors?
Would you want to react, or I take?
This is a little bit too specific for me on our lending side, so I'll pass this.
Mm-hmm. For the banks, I think it doesn't really make a difference whether it's a green or a different technology. It has always been a problem, obviously, for regular banking to fund anything which is at an early stage or at just a concept and there is no proof of concept. So from that perspective, for us, it's an equity risk, obviously. We are trying now we are looking at a couple of things or a couple of projects of similar sort in Central Eastern Europe, because obviously what is very positive about Central Eastern Europe, that it's very innovative. So there are already many innovations who could ease our sustainable life already, and implementation of sustainability. So we are now trying to dedicate specific funds for that, understanding that these simply need to be already creating reserves for 100% of the dedicated capital. For banks, it's very difficult because it obviously consumes a lot of regulatory capital.
It's maybe a topic for another panel about startup financing, venture capital, but maybe Philip?
Yeah, well, from a practical side, from a company side, of course, the companies have established close contacts to the universities and to the scientific institutions in order to foster their own R&D efforts, and that's pretty important for them, especially in the fields of sustainability, make sure that they're going to use the best available technologies. And this is something which is also done, for example, in German-speaking countries, also by mid-cap companies, so by medium-sized companies that have established linkages to the universities to make sure that they are, ahead of the game, that do have some kind of competitive advantage. And this is something recommendable for all the companies, especially when you do have a business where there are lots of competitors around. You have to come up with sustainable products, and of of course, universities, scientific institutions know what is coming next in 5 years or 10 years' time. The sooner you establish contacts, the better for you.
And then there is a last question of our panel, which is maybe the topic for another panel for the next year. For sectors that are unlikely to meet the net zero goals, because there will be such sectors and companies, what is the attitude to carbon offsets? Ayla.
Yeah, I think there are two questions about carbon offsets. In the big picture, they are usually sort of thought that this is the sort of the last step, that you decarbonize first, and then what you can't decarbonize you can use offsets for. That's the traditional wisdom. But recently there's been more talk about the quality of the offsets. We've seen that, well, sometimes they go towards some renewable energy projects which are quite profitable and get well financed anyway, so there's zero additionality there. Or they go into planting trees, and we don't really know if the trees are planted. Or sometimes the trees are planted, but then there's a wildfire and the trees are gone. So I think that this whole carbon offset sector needs to be rethought more thoroughly. But it is meant to be just the last step, the sort of the plugging the last hole. We can't be just decarbonizing our economies if, Eva and I here are trading offsets one or the other direction. That can't be. But the whole area needs to be rethought, in my view.
Indeed, this is what we are seeing, and it will be, the strategy to offset will need to be a mixture of various instruments and technologies, and they are evolving. Some of them have already proof of concept, and some of them already have a sound business model, so there are already 10, 15, 20 years agreements signed with these kinds of companies who are just putting emissions out of the air and putting it either to earth, or they are producing something for it which can be used in the industry. But this will be heavily evolving in the coming 5 years.
Well, the EU Green Deal and the Fit for 55 strategy does provide very powerful instrument for carbon offsetting. It's still the emission trading system, ETS, is in place, and the companies who can't fulfill the requirements, or who are situated in the heavy industry or in fields the energy sector, they will have to buy certificates, and then they're going to do the trading. And this will turn out to be more powerful in the future, because I think it's going to be done in a proper way, because many mistakes have been made, but this might be also very, very useful, that companies who might have problems to fulfill carbon reduction targets have to pay attention to the ETS and have to find ways how to use that system for their own purposes.
Thank you very much. That was the last word of our panel. Thank you, Ella Kreve from EIB, Filip Kilius from Mazars, and Eva Bučová from ING Česká republika. Now we have a half an hour break, coffee break, network break, and then at 11 there is this already promised CBAM panel. Thank you very much.
Thank you very much to Martin for moderation, and to the panelists. And thank you, Martin, for doing my job as well, by the way. So there's actually nothing else to say here. Exactly, so we'll be back at 11, so in 30 minutes for the second section of the day, which will be focusing on CBAM and other regulations. And yeah, enjoy the coffee break, and we'll see you soon. Thank you.
Mazars is a leading international audit, tax and advisory firm, fully committed to play its part in creating a fairer and more sustainable world. Our people all over the world are dedicated to helping clients mitigate risks, operate transparently, and grow responsibly, while always keeping the public interest at heart. Now, more than ever, organizations must ensure the actions they take today are the right ones for the future they want to build. Acting now for what's next.
Hello, hello. Okay, so we are back after the break. Hopefully everyone is energized, had coffee, is ready for more knowledge and to be shared and to be learned. The next section or next block of today, which is focusing on sustainability in business, will be specifically focusing on sustainability in business models for companies in the CEE. And this block we will start with 2 keynote speeches, and then we'll slowly move on to a panel discussion. And I see people still coming in. I actually hope people can hear me even outside, so they will come in. And I think that's actually, maybe without any further ado, we have 2 amazing elevator speeches, as we call them, so short keynotes. So I will probably just give the floor to Pavel Zamyslitsky, who's the Director of Energy and Climate Protection Department at the Ministry of the Environment of the Czech Republic, who will talk to us about the future of business. Pavel, the floor is yours.
Good morning still, ladies and gentlemen. It's my pleasure to be here. It's a rather presentation. I would like to talk about where we are in Fit for 55 package. So it's of course important for you and for business models in order to get what is the further path in our transformation towards climate neutrality by 2050. So where we are, you can see on this picture. So I would say that we are in the middle of the transformation. If I take the whole time since 1990, where in many CEE countries started the revolution, not only political but as well economic revolution and transformation to the market economy. So in terms of the emissions, we slashed emissions within the EU roughly about 30%. But the most crucial and most important part is still ahead of us. Since 2030, we should achieve at least 55% emission reduction in GHGs. And what I mentioned, by 2050, achieved climate neutrality. It means that almost in all sectors, we should achieve decarbonization or full decarbonization. And for the remaining emissions, in the end, we should compensate them by sinks, by natural sinks in the forestry sector, or by technical sinks, thanks to technologies like CCU or CCS. Just briefly looking at the key steps in the recent time in the European climate policy. Everything important, I would say, started in 2019, that in December Commission presented the European Green Deal, which is the enormous package of different policies and measures which are focusing on different sectors and decarbonization or climate adaptation or financial sustainability. So it's really huge. What is another important element of the whole process is the European climate law, which was proposed by the Commission in March 2020, which is, let's say, which is cementing the targets and the pathway by 2050. So we have now 2 important steps: the target or the milestones, the target in 2030, the final target in 2050. What is remaining is 2040 and is going to be proposed by the European Commission next year. So then we will have the whole pathway for GHG emissions. It means for whole sectors and greenhouse gases. Another important step I would like to mention, that there was a target for 2030 set or proposed and set, and I would like to speak in most detail is the 55% package Fit for 55, which was proposed by the European Commission in July 2021. It was the main challenge for I would say 3 or maybe 4 European presidencies, including the Czech one, Slovenian presidency started debate about the package. During the Slovenian presidency, we heard about the implementation proposals, the details about the impact assessments. Then the French presidency took over and started preparation of the council positions in respect of different parts of the package. You can see a lot of acronyms. I hope that for majority of you that you are familiar with all of them. I will speak in more detail about at least some of them. So the French presidency in June 2022 concluded the work on the position of the Council. The same thing happened in the European Parliament. So the Czech presidency in July 2022, last year, we received the mandate for starting of trialogues with the European Parliament. So, we started the process for the finalization of the whole legislation. At this slide, you can see just a list of climate files, because in the Fit for 55, you can find as well the energy part. So the list is really long and really huge. And at the beginning of the presidency last year, we just made the debate on how many of them we could conclude. I mean, the trialogues with the Parliament, because they are quite lengthy. You need to organize the usually 3, 4, 5 meetings between the Parliament and the Council. You need to prepare as well the technical debates by experts. And and if you take one legislation piece, usually you have many pages you need to go through and find compromises between the position of both sides, the Parliament and the Council. So at the beginning we discussed that maybe 3, 4, 5 files would be okay to agree during the presidency. Finally, our negotiators were so skilled that we achieved all agreements on all files during the Czech presidency by the last trialogue, which took place on, I think, 20 December on ETS and all the ETS elements. So we were successful, and just the Swedish presidency now is finalizing all the things. If you are interested, you can now majority of those find in the official journal of EU legislation. So they've been published, and they are ready to be implemented. So I mean, the ETS, you will discuss the CBAM, carbon border adjustment mechanism, during the next panel. The whole thing is relatively complex, as you can see from this picture. On the left side, you have the 3 key elements which are underpinning the at least 55% reduction goal. So there is a target for ETS sector and for the industry and power generation. There is a goal to reduce emissions about 61% by 2030. Then the second area is covered by effort sharing, so-called effort sharing regulation, with 30% emission reduction cut. There are individual targets for each member state divided by the GDP per capita, which is the main key element for division of the targets. The targets between different member states are divided, I think, from the reduction of -10 for Bulgaria and until -50 for, I think, Germany and Sweden and Luxembourg. And the last but not least, land use change and forestry is the third piece of the puzzle, which is covering all the GHG emissions and things within the EU. On the right side, you can see 3 key sectors: buildings, transport, and energy, which are contributing to the majority of GHG emissions. And in the middle, there is a very, very long list of different regulations and pieces of legislation which are helping to reduce emissions. Usually the main problem of the EU legislation is that is very complex. It's sometimes very difficult to be ready to understand all the things. Of course, that it's not easy, but it's I would say it makes sense, and definitely it makes together at least 55% by 2030 in terms of emission reductions. And I will tell you more about the implementation, about the details in the coming minutes. Here is the list of targets and sub-targets. It's probably very difficult to read for you, just showing how many of them has been set by the Fit for 55 package, starting with the ETS. There is another target for the sales of cars and vans by 2035. It's a very difficult debate on this ban on traditional engines since 2035. And there are other targets, especially for sustainable fuels in maritime and in aviation. There are some other targets for renewable energy and for energy efficiency, but I would skip it. You can definitely look at the slide afterwards. Hopefully the presentation will be ready for you to be downloaded. Just on the implementation, what is now ahead of us, and all governments needs to look carefully on the outcomes of the Fit for 55 package and to secure that the targets which have been set are implementable by 2030. So in case of the Czech Republic, we need to reduce emissions in non-ETS sectors. It's ETS 2 sectors. I would like to mention especially buildings and transport as two major. We need to reduce emissions by 26%. So you can see on the right side that this quite steep line, which is much more steeper than the trend since now. So it's going to be quite challenging for all member states to achieve what is regulated by the so-called effort sharing, and we hope that especially ETS2 as a new element, it means that the emission trading scheme was enlarged and now should cover as well the transport, building and under combustion sources outside the ETS1, that it will help. It's important that MRV, it means monitoring, reporting and verification, will start in 2025, but the pricing of emissions, it means that the first rounder of emission allowances will take place even in 2027. The third important target for the Czech Republic is the target for CO2 sequestration in forest and soils, so-called LULUCF. It's the target has been set on the level of the sink of minus 1.2 million of ton of CO2. What is quite challenging because just the Czech Republic is in the sinks. On the opposite side, we have very huge emissions. It's around 10 megatons annually, thanks to the bark beetle calamity, which is killing spruces in our forests, and so we need to completely adapt on climate change, on bark beetle calamity. But hopefully by 2030 the situation in Czech forestry sector will be better and in the whole region, because our structure of forest is not very sustainable in terms of the impacts of climate change. I mentioned the new limits or new standards for CO2 from cars. There are other targets and sub-targets coming from the Renewable Energy Directive and Energy Efficiency Directive, which all member states, including the Czech Republic, needs to plan in the update of the national energy climate plan. So all member states that they have already the national energy climate plans, what is something like a Bible, how you would like to plan in your energy intensive and other sectors to decarbonize, and how you would like to fulfill your 2030 targets. So all NECPs must be updated, and they will be, of course, checked and reviewed by the European Commission whether they are fit for all the 2030 targets of the Union, whether they together are giving the right numbers. So this is the reason why update of the NECPs is very important during this year. Just a small snapshot from the modeling. We have the consortium of experts called SEPIA, Social Economic Impacts of Environmental Policies Modeling. So during the autumn last year, that they focused the models on impacts of Fit for 55 on the Czech economy. So there are some interesting results just showing that for the ETS sector, it means for industry and for energy sector, it's enough of inputs coming from the price of EU allowances, which is now roughly 85 euro per ton of CO2. In this year, you maybe recognize that the price taken 100 euro target, but now it's relatively lower. But together with existing financial resources coming from the modernization fund, that the sources will be enough, the inputs will be enough for ETS1 to cope with the target. For ETS2, it means for transport and for buildings, that there is the different situation. We can expect the start of the ETS2, I mentioned, only in 2027. So there is a need to start immediately with action, with subsidy programs, and with motivation to do something with emissions from ETS2. Otherwise, the targets won't be met, and there would be the negative impact on GDP, because the price of allowances in ETS2 would cause lower consumption of households, and thanks to this, there would be a negative impact on GDP. There could be a positive impact if all ETS financial sources would be generated in the right way. So it means that the ETS revenues and modernization fund revenues, especially, and social climate fund revenues, would be spent in the right way. The ETS directive should help, because now it says that member states must use or shall use all the ETS revenues in the climate investments, or to support climate investments. Just on the charts here, you can see the impact of the price 45 euro in ETS2 on a different fuels. So hypothetically, for natural gas, for gasoline, and for coal, you can see what would mean if we have 45 euro price. What is the impact on the final price for consumers? In terms of natural gas and gasoline, the impact is not so huge. It's around 5%. Of course, in terms of coal, the impact is around 20%. Just the question is, and experts are not ready to answer with the big self-confidence, how long we will have the price 45 euro in ETS2, because there is a MSR which will influence that the price should not be relatively higher, but there is only one shot every year for MSR to stimulate price and to give additional allowances if the 45 euro price would be touched by the system. But we can expect that the price will be higher, so it means that the impact on prices of energy commodities will be higher as well, thanks to the ETS2. So just a redistribution or proposal of redistribution of the ETS funds. Czech Republic, but as well other member states in the region will see the highest amount of money in a history, which could be spent in the different sectors to help with modernization and with fulfilling all the Fit for 55 targets. Sorry for the amounts in the Czech crowns billions, but if you divided them by 25, you can get them in euro. So just the total amount is on the left side, the sources are on the left side, is around 4 billion of euro. The largest on the top is the modernization fund, which is the ETS fund under the directive, which is serving to CEE countries and other countries to help with modernization of industry and energy, but not only. The ETS1 shows the number, shows the income from the auction of allowances in ETS1. The ETS2 shows the income from the sales of allowances in auction of allowances in ETS2. The last figure representing the revenues from the Social Climate Fund. And according to modeling, you can see that something like a small redistribution. I mentioned that the government should focus on transport and building. Of course, the majority of financial resources would be still spent in energy and industry, but the transport and building are important thanks to the start of the ETS, that they need to make much more quicker renovation and much more quicker reduction in transport. Of course, that the government needs to think as well how to spend money and help people which will be in need from social perspective for those who will be the most affected by the ETS2. So there is the reason for implementation of measures now and in future to help with subsidies, especially, for instance, in the Czech Republic, we have the program New Green Life for Savings, Nová zelená úsporám Light, which is devoted for those people with low income, that they can as well invest in thermal insulation of their houses or renewable energy heating. Okay, just the tasks ahead of us in summary. I mentioned the NECP, National Energy Climate Plans, that they need to be updated in June. It's a very optimistic deadline. I think that there is going to be a delay in many member states, including the Czech Republic, thanks to the late publication of some of the pieces of the Fit for 55 legislation. In the Czech Republic, we are planning, or government is planning as well, update of the energy policy and climate protection policy by the end of this year. The process of NECP considers that the European Commission will assess all the drafts of the NECP and will deliver recommendations which need to be reflected by the member states, and the final NECPs will be adopted in June next year. Of course, that all the important pieces of the Fit for 55 legislation needs to be translated into the national legislation. So, for instance, we prepare the new amendment of the ETS Act in the Czech Republic to reflect all the changes in the directive. But we need to prepare as well ETS2 and other pieces of the legislation. It's true that, for instance, energy pieces of the Fit for 55, that they have certain delays. So, for instance, EPBD as the last Energy Performance Contracting Directive will be finalized probably during the Spanish presidency in the second part of this year. Yes, and there are some new important proposals coming from the European Commission which are being discussed, like the carbon farming or CO2 standards for heavy-duty vehicles, new electricity market design, Net Zero Industry Act, Hydrogen Bank, and others. So it's a lot to do, and now I would like to finish, and thank you for your attention. If you have any questions, I'm ready to respond. Thank you.
I'll stand here. Thank you so much, Pavel, for the presentation, packed with information, actually. With one thing is for sure, especially looking at the bullet points on the last slide, it's been keeping you busy. I can see that. That was, from my perspective, actually a very, very useful presentation, full of information, and that is, if you think about it, so there's so much behind that work where you have to go through all these legislations, which usually are hundreds, if not thousands of pages, to actually distill it like that, to have it in the slides and to have that good overview of what is happening and what is planned and what's in the pipeline is actually very valuable. And as you mentioned, I think we can share the slides with which we will do. So thank you so much for providing this very useful overview. And so just to mention, I've been told by my colleague to mention that there might be still in this room, some people who are supposed to be or are expected at the decarbonization of industry roundtable next door, although I have already seen some people disappearing during the presentation. So probably, if there's still someone who is meant to be at the decarbonization of industry roundtable, you can slowly now disappear while I talk. No one is looking. And then now we will move to the second elevator speech, or the keynote speech, and this will be delivered by Dr. Helena Nafa, who's the Associate Professor of Corvinus University of Budapest, and who will talk to us about the paradigm shift in sustainable finance. The floor is yours.
Thank you. In 2015, the top 3 academic journals in finance had 0 mention of climate change, whereas other sciences, social sciences, economics, and environmental sciences have gone a good way of shifting the topic from niche into mainstream. And we have a lot to do in finance research as academics to level up with the other sciences. There is a dire need for empirical findings and developments of economic models. But as we emerged from the pandemic, we were faced with a new world order. There's a war waged by Russia against the Ukraine. We are faced with elevated inflation. Food prices have soared. Lending is very expensive. And that has led to socioeconomic struggles for many layers of society. And across the globe, we are seeing elevated geopolitical tensions. In the United States, the topic of sustainability is under the crossfire of politics. And there is a dire need to progress with scientific findings. We've spoken about sustainable growth in this conference. This is an oxymoron, 2 conflicting terms. How can we grow sustainably, endlessly? Let's change that terminology with sustainable development. And let's consider other ways of achieving sustainability. Degrowth was brought up as a viable alternative. So we identified what are the dire questions that need to be answered by academia in finance to the pertinent questions that are faced by the industry and by decision makers and the regulatory. The first pillar is disambiguating the confusion that we read in the literature. There were very interesting talks in this summit, and even very conflicting debates on the need for standardization of the ways we measure sustainability, of the ways we present the data. Is it useful to have heterogeneous opinions, or is it just adding to the aggregate confusion, as we read it from the MIT paper? But we believe that we need to enhance the economic models to incorporate the consideration of sustainability. In the classical utility function of investors, if you add the layer of sustainability, how does that shift the priorities? This is what we're trying to achieve and trying to understand where are the differences stemming from investors, some of them who can generate alpha, extra returns from aligning investments according to ESG preferences, and others just believe that and see that there is a pricing bubble in these ESG assets. One hypothesis I'm considering with my fellow researchers is that there are two groups of investors. Some of them are ESG motivated, while the others are ESG aware. And the motivated ones usually have a longer investment horizon, a long duration, if you like. And with that long duration, we are talking about investors such as pension funds or sovereign wealth funds. Usually, the observation on the market shows that this group is less active in trading. Hence, the opinion of the short-termed, short-sighted traders is the one that's registered into asset prices. So you see the asset pricing bubbles in ESG assets. And what this long-term vision group has done is that they realize if they want to voice their opinion, then they have to shift from the trading floor, from the trading room, onto the boardroom. And as they are the majority of the asset owners, so not in volume terms, but in assets under management terms, they have the upper hand. New techniques, new strategies of implementing sustainability aspects are emerging. We'd like to replace the very simplistic exclusionary policies with engagement, with active ownership. And this brings the other question, which pertains to risk management. A lot of the companies see the value in sustainable finance in managing the new types of risks they are facing. Climate risk is one, but greenwashing is another one, which is more and more important, related to reputational risk. Some research findings from my colleagues have shown that if the governance of companies are up to a good standard, then that has shown that it's very much related and a very good predictor of potential and future operational losses. So that's one extra layer of additional benefit to that. And finally, we think that how to manage the risks in looking at the empirical evidence is very much empirical-based and data-driven. So we are building unique and large data sets with our partners who are providers of the data to enable us to give more insights to the industry. And finally, we're seeking solutions of how to implement the ESG strategies, the sustainability investment goals, how to allow investors to align financial value along with their own investment values. So we want to explore what is the extent and what are the limitations to each of these strategies. The very typical strategy is simply ignoring the companies that are not aligned. This is the negative screening strategy. But that's like shoving the problem under the carpet and not dealing with the problem. So the focus is more on integrating ESG considerations, looking at progress. Where is CapEx, capital expenditure, going to? Is it aligned with sustainable activities? and taking it further down the line to focus on stewardship, active ownership, and engagement. We are conducting this research with 15 of my fellow researchers across 4 universities, and we are seeking out partnerships to facilitate our conduct our academic research. Thank you very much.
Thank you very much, Helena. It's actually amazing to see that research like that is happening here in the region in Central Europe, and you're doing a really, really good job. So if anyone would like to maybe participate or support the research, which is really useful for, I think, for the market overall, and actually for all the actors in the market, definitely speak to Helena later as well. So thank you so much for that. I'm actually enjoying this section a lot because we have now seen and hear more about the academic research on these topics, which is really good to see that is developing as well. We have also heard from the government and from the governmental angle, so it's a nice combination of different backgrounds and different sides of sustainable finance, whether that is regulation or research or trying to apply research and regulation in practice. But now we will be moving to the panel discussion of this section, which will focus on sustainability in CEE business models. And this section will be moderated by Rafael Minder, Central and Eastern Europe correspondent for the Financial Times, who I am inviting to the stage. And I will let you introduce the speakers yourself, maybe, because I mean, apparently I've been stealing jobs from moderator.
Shall we take seats here?
Yeah. Yes.
So, fellow panelists, please let's take our seats.
Yes. So I'm inviting all the panelists to the stage, and I will then, Rafael, let you introduce the speakers once they're sitting. So enjoy the discussion. Thank you.
Hello. Maybe you should sit under your own name.
Oh, you think?
Sorry.
Okay.
Nice meeting you,
Don't do that. Nice to meet you.
So it's a pleasure to be here. Many thanks for hosting us. I have the great pleasure to have people with great experience and very different experiences with me. We have Hans van der Loo, who is the chairman of the Institute for Integrated Economic Research. He's based in Lausanne, has had a lot of experience of industry, worked with Shell, and will give us a perspective that maybe combines, straddles business, academia, and I think we'll benefit from that a great deal. Then I'm also introducing Fadi Alkhair, who is, as I discovered, preparing for this, a man of many talents, known here in Prague for his chocolate and restaurants, but these days dedicated to the less succulent but more significant, perhaps, business of energy, providing technology for the grid and services to pretty much all the different industries that we can think of in this region in the Czech Republic, and at the same time also involved in the renewable energies, including the battery question, which is so important to us. And then Marta Mikliszanska, who is coming to us from the country where I now live, Poland. As you can tell, I haven't lived there very long because I'm still struggling a great deal with pronouncing the names of all the great Polish people I'm meeting.
You did a great job, Rafael. Thank you.
Marta is representing one of the most successful companies in Poland and now beyond, actually recently present in the Czech Republic as well. Allegro, the biggest e-commerce company in Poland, originally from the city of Poznan, now with a huge footprint, but not a huge carbon footprint, and we'll talk about that. Yes. But almost 8,000 employees, I believe. So perhaps I'll kick off. I had the privilege over dinner to speak with Hans, and 2 points that he made I was going to bring up. One of them was the issue of data and the problem of not including trade in the data that is used to calculate emissions. and we sort of look at emissions, but we don't look at what happens when they cross borders. And linked to that is the issue that is now being raised, but it seems at a very late stage, of what is happening to companies that have relocated to avoid tougher regulation, particularly in the EU, and how we can at least create incentives for others not to follow them, and possibly incentives for some of them to actually come back. Just as America has, since the presidency of Donald Trump, has done a great deal to get companies back onto US soil, what exactly is Europe, the EU doing, and to what extent it's doing it too late, or actually still has a possibility to catch up? And I think that ties in with some of the other discussions we've had on the IRA and other very important questions that are sparking as much enthusiasm, I would say, as fear at the moment in this part of the world. So maybe I'll start with Hans.
Yeah, thank you, Raphael. And I did not know you would be the moderator because I didn't know your name when you're sitting opposite me at the table yesterday, but it was a good serendipity as we concluded. When I, many years ago, after the same university we attended, I joined McKinsey, I worked for a partner who said, what gets measured gets done. And if you cannot measure it, then it's very difficult to do it because you cannot measure progress. Yeah. But you, quite rightly, Raphael, said you have to have the right data. Because if you measure based on the wrong data, you may do things because what gets measured gets done, but if you measure the wrong way, the wrong thing gets done. And that actually is a problem of ETS. Now, you did say I worked for Shell, so in 2002, Shell actually contributed to the birth, it sounds counterintuitive, to the birth of ETS, because we saw it as a better alternative for a flat carbon tax. Because a flat carbon tax means that every bottle of water or fuel is treated in the same way. But maybe that bottle of water or that liter of petrol is made in a more environmentally friendly way than in a very old refinery. So we wanted to see the innovation and the investments made in clean production reflected in the way you were treated. And a flat carbon tax would not do that. So we said to the Commission, come up with a system where you measure the actual emission and send a bill. The Commission then said, well, you're actually intellectually right, but it's a bit difficult to do that. It's much easier, we just levy it to the price and then we collect it and then we go with that. And so actually the Commission went to the United States and looked at the sulfur trading scheme, which they had there already, which follows that principle. So if Marta does emit sulfur, she gets an invoice, and if Fadi does not, he does not get an invoice. So you differentiate it, and that is an incentive for Marta to also make the investment to do that. That is what the ETS has done and achieved, and that is good. However, in Europe, the reference year is 1990. So everything we say progress relative to 1990. And the European Union thinks that they have actually done a good job in that they reduced carbon emissions since 1990 by 40%. However, quite a significant part of the reductions have actually been relocations. Now, the last time that I looked out of the window, I think there's only one planet, and there's only one biosphere. So it doesn't matter where you emit the CO2, what matters is, do you emit CO2? And whether you have it emitted by somebody else somewhere else, you are still liable for the emissions that you caused by signing for a contract of a new car or a service or whatever you do. So we said to the Commission, you are actually measuring wrong. They said, well, yeah, this is interesting, but it's just too complicated, we're not going to do that. So we then went to Business Europe, which is the association of all the industry in Europe, and said, well, this is what they're doing. This is not in your interest, because your weaker brothers who will close shop in Europe may set up shop outside Europe, then bring in, say, steel to sell to Skoda into the Central European region and do not have to pay for the CO2 emissions, whereas those that stay here do have to pay. That's not a level playing field. So Business Europe went to the Commission and said, well, this is not good. And, well, yeah, but you have better staff, and we got all the innovation, and we got subsidy for R&D. So we went to the ETUC, the European Trade Union Confederation, and said, well, this is what the European Union is doing. This is not good for your employers, and if your employers go bankrupt, your members will lose their jobs. So they went to the European Commission and said, well, this is not good what you're doing, because if you do what you do, our members lose their jobs. And you know what? Our members do not only have jobs, they also have votes. And then the European Commission listened. So in 2016, I have left Shell 10 years ago. I'm now the chairman of a think tank. We developed an idea which we called TECS, not TAX, but TECS, True Energy and Carbon Statistics. So basically, we in the West, the OECD, are burdening developing countries, saying, oh, you're really doing a bad job, China and India. Look how much CO2 you're emitting. But the bulk of the CO2 they are emitting for us. So we should be paying for that. And also that CO2 emissions should be on our account. Because what in the end we want, Raphael, we want to change the behavior and the choices of individual citizens of the world to be aligned with well-being of future generations. And by just shoving it to somebody else's... so now I've got a clean garden now. Marta and Fadi, you've got the shit. That does not work. So it's sad to say that it took 6 years. So we presented TECS, True Energy and Carbon Statistics, in 2017. And last month, the European Commission and the European Parliament agreed on the carbon border adjustment mechanism, which means that if you, wherever in the world you produce, if you sell your product in Europe, you're treated in the same way as your European competitors. And it's not so much, you said that Trump wants to bring back companies. Europe does not want to necessarily bring back companies. Also, some of that happens because the long distance management is difficult. But if it is an incentive for an Indian company to produce the steel more cleanly, that is good as well, because when it comes into Gdansk, we say how many tons of steel you have on board. Okay, per ton of steel, you have to pay so much CO2, unless you can prove you emitted less CO2 per ton of steel than we assume. So it gives you the opportunity outside Europe to actually, and an incentive to invest in cleaner production, because you will be rewarded for it in the biggest market of the world. So I think CBAM is really good news, but we have to measure things properly. So two problems that remain is that the trade, so it's basically emissions embedded in trade that are now treated the same way as emissions emitted in Europe, and that's correct. The problem, however, is that this will actually get into effect in 2025. The European Commission still thinks and claims that we have reduced CO2 emissions by 40% since 1990. Actually, we have to add back 1/3 of those emissions that were merely relocated. So if you look at what are the targets for 2030, 2050, well, we are not here and have to go there. We are there and have to go there. So the road we have to go is actually steeper than they claim it is.
And just to know, I know it's very new, it's just come into force, but who is going to be the arbiter, the enforcer and the arbiter of the kind of disputes you're talking about? If someone says, you have to prove, and that Indian company says, here is my data, and we started by saying the data is as good as the people who collect it. Who is going to be the arbiter of that international dispute? Is it going to be a sort of WTO equivalent panel?
I think they'll have to go. That has not been settled yet. So what has been settled is who has to levy the charge. That will be the port authorities. So it comes into Gdansk, then Gdansk port, as a ship comes in there, you are not allowed to unload it onto European territory unless you've received the monies. But in case that you say that, yeah, but I actually produce it cleaner, then we need the independent verification, obviously. And of course, it would not be very good if the European Commission would be then the one to do that, because then you got a conflict of interest. So probably of course, we deliberately do not call it an import tax. It is basically a standard that you have to comply with in order to sell your products or service on the European market. And probably it will be a WTO-like body that will do that, which will happen over the next 2 years. And what we hope is that other policy areas will actually adopt this as well, just as with the GDPR, I mean, it's actually being adopted elsewhere. Many people say that the European GDPR, the data protection, is the gold standard for that kind of data. And what we see that many other governance areas in the world are actually adopting or basing their own legislation on that. So we do hope that CBAM actually will become like a global standard, because right now you have, for example, as the problem that if you are a steel maker in Europe, theoretically, and you would export, let's say, to America, well, you have to pay here in Europe the CO2 emissions, but if it's exported from India to America, you don't. Or should we arrange that for the export, you actually get the money back? So these are things that are still debated, all in order to make sure to do two things. One is a level playing field, and secondly, to have an incentive worldwide for lowering the carbon emissions for all the things that we do.
Fadi, we heard just before from the Deputy Director General of the Environment Protection department of the Czech Ministry. I wanted two things that struck me were interesting, relating actually to the time lag that Hans was discussing. ETS2 coming into force 2027, which seems to me quite far. And the second one was this zero emissions target for passenger cars, light vehicles, in a country that really relies heavily on the automotive sector. I would say in general, Central Europe relies heavily on that sector. As the car makers are among your customers, how do you see the two going together? Industry goals, government goals, are they really aligned?
It's a really good question. I was thinking about the topic when I was invited. It's great to have me. Thank you. What I observe is, like, if you ask the question, is it possible to have a sustainable business model to my customers? Honestly, like 95% will say, no way. I think it's a general atmosphere. I can speak about Czech Republic because most of our operations is here. And I think there is good reasons for that. Because Czech Republic GDP is 35% of that is automotive and very energy intense industries. And we have on average per GDP unit double the emissions that the European Union average. So we are in a position where we are really our economy and jobs are very sensitive, and also sensitive to the topics you mentioned. And I would be really happy if my customers and our partners will be here in the room and hear that there is someone doing something about it. Because what I see is that they are missing some kind of like vision and direction. And for example, if you compare Czech Republic to Germany, where the Minister of Industry, Mr. Hubek, introduced some kind of like vision and plan how he gonna align these two targets, like being more sustainable and preserving the industry, there is at least a vision. But here, there is not even a discussion about the vision. So the people in industry, industrial owners, managers, they are really on the fear side right now. And they are just reacting on what's going on. And there is so many things, not just the legislation, but real structural things. We had the highest increase in energy prices. Like considering what I've said about the structure of our industry, it's a big shock to our economy. I think we are still not really aware of how big the shock was. And before that, the COVID situation. So it's like constant juggling, trying to like somehow stabilize for the industrial managers and owners. And it's completely, the strategic discussion is completely out of the table. And it's out of the table on the level of boardrooms, majority of them, and it's out of the table, it's not on the table on the public level, and that's really what concerns me. So if you ask me if a sustainable business model in Central Europe is a mission possible, I would answer it is if it's possible anywhere else, but we need to really sit and speak together. What kind of country, what kind of industry we want to be in the future, what is possible, what is the structure of our talents, and how we're gonna proceed. And we don't have such discussion. So the demand for photovoltaic, for me, it's great. I can kind of like navigate in the situation. We install a lot of photovoltaics. We have a huge demand for batteries. But when we want to speak about longer perspective with our customers, they, oh, just fix the high prices of energy. Let's do the simplest, less risky move to just stabilize. We don't want to discuss anything else because we don't know what will happen in the future. We don't know what this country wants. Does it want car manufacturing? What type of car manufacturing specialties? What is the long-term vision? It's absent. So it's a very difficult situation here in Czech Republic. And I'm a little bit envy because I watch Poland and I watch the movement there. And I think you are much more brave to discuss and reinvent yourself than we are. Unfortunately, until now, last 15 years, we are trying to conserve the status quo. That's what the situation is.
Marta, Hans was saying what really matters is what the end user does, not, nothing really else should matter. I'm asking, you have a platform that allows you not just to encourage people to buy, but also to buy in a certain way and buy certain things. So how much of the thinking about these great and very important targets that we should be thinking about is actually incorporated in your business model? And how much can you even afford to incorporate when we know how, in the end, price sensitive customers remain? If Allegro is not selling it, they might, at the price that they want, they might find it cheaper elsewhere.
Of course, of course. Today I had this real pleasure to listen to previous panelists as well, and there is so much said about the regulation tsunami coming from the European Union, but also like globally, you know, there is so much going on in terms of regulating businesses and state-owned companies as well. So regulations is, of course, as long as it's discussed with business, I'm very much in favor of, because I think it's something like impulse that would really make a change. But apart from regulation is the consciousness and awareness of choices and encouraging our end users, but also our business partners, our sellers, to make sustainable choices. So education and encouragement and giving the right tools both to consumers but also to those merchants on our platforms is a key. So as a marketplace, as you mentioned, and thank you for your warm, kind words about Allegro, we have, I would say, a special, unique role to play, because we are combining sellers. At the moment, it's more than 130,000 of sellers, and around 90% are SMEs, which is, I think, is very important. I would come back to it in a second. And we have like millions of consumers. So thanks to this volume of operations and thanks to our impact, we could really make a real change, you know, by providing some new solutions, but also new embedding some new innovative tools into our business. We could really make this change in a very holistic and, I would say, evolutionary way. So I think encouraging is a key, and educating, but also giving a very tangible tools. For example, to our merchants, so this is like a sustainable certified packaging. It's something that we encourage them to use. It's a very good price. I would say we are not having any fee on it, so we are not earning any money on this. And this was a decision made by our board, like, you know, to invest in this type of packaging, because when we speak about the e-commerce, packaging and waste management is a key, is a crucial thing to be addressed. So this is our investment into packaging. We are encouraging our sellers to use it. Thanks to this, I think, you know, our consumers can have this feeling and can see that this is how we can influence the whole process and the whole shopping process. So I think it is very, very important. But it's just one of the examples. Also, how we design this last mile delivery. So we encourage our consumers to use APMs, which is, you probably know, Rafael, is automated parcel machines, pickup points, which is really, at the moment, the most efficient and most sustainable way of delivery.
Which is very advanced in Poland, right?
And it's very popular, but I'm really glad, because, you know, this is how we want to encourage our consumers not to take this delivery to the door delivery and the courier, but like to choose, you know, different ways of logistics. So which is really better for the environment, I would say. So of course, the tools and examples I'm giving now is something that is very important for us. We want to Of course, we are measuring it, so we know that, the numbers show that both consumers are getting more and more demanding in this, and they want to have this process, delivery process, but also shopping process, easier, but also more sustainable. So we know that this is the right way to go. And for the sellers, it's a long way. I mean, we are supporting them. We know that encouraging is more important than forcing them, because they would, as you said, they would simply choose, another platform, like, to make the business on. So we want to do it in a smart way, evolutionary. And at the end, I think our own decarbonization process. We are, as a company, we're the first e-commerce and the first tech Polish company that joined the Science Based Target Initiative 2 years ago. So we set up our climate targets. It was validated by SBTi last year, and now we are on our own pathway to decarbonize. Although our footprint as a company is not that large, we're obviously measuring it and reporting it. We became the public company 2 years ago, and it also posed some new duties and new requirements on us in terms of transparency. But we have been measuring our footprint for many years back, but now it's like a bit different situation, a different format of measuring and reporting it. So I hope I answered your question.
Yeah, I'm just curious to know how much consumers have changed their habits. We heard in the previous presentation from Professor Helena Nafa that none of the major publications talked about this issue in 2015. I am getting now, for example, if I try to buy a plane ticket, I'm getting an option to pay something to offset my carbon footprint. But how many, have you got any measurement of how big is the willingness of customers to work with you on incentives? I don't know if you provide specific incentives at the point at which they're buying or not, but are we really seeing a shift, or is this not happening? Well, with food, for example, I have the feeling people are willing to pay now. Not everybody can, of course, many people cannot even afford it. It's a luxury. But people who can are willing to pay more for certain branded as organic items. Is this happening on the level of online retail?
Yes, it is. And we don't have this special incentives, as you mentioned, like for offsetting. This is not something that we've been doing. But we have a different approach. We encourage our consumers to, for example, make shopping by location. So this is the filter that you can use, and you can shorten the way your product, the way of your product to be delivered from the seller to consumers. So this is like, we enable consumers to make the right choices. And from our the research that we've done also with the Polish Chamber of Commerce in Poland, we can see that for 85% of consumers, it's very important, if the product is sustainable. And I don't mean just the supply chain. This is very important, but also how it's delivered and how it's packed. The way it's delivered to the consumer. So this is it's a growing trend. We can see also the trends in terms of giving the second life to products. So this is also, I think, very interesting business trend. And we have invested heavily into our C2C platform, which is giving this option to sell the old used things on the platform. And for the first year of this platform, we saw that over 1 million of offers was sold on this. So I think it's to see options and possibilities and chances where they are, and to use them in the right way, but also to communicate it in a good way. So I think communication is very important, and this greenwashing thing and green claims was also a topic of today's panels. So to communicate it well, to base on data, on measurements, and on how to have this really based on data and research, but also to communicate it widely and to make our consumers more involved into the whole process, because at the end, they make the choices.
Is there anything, maybe Fadi, going back to the Czech Republic and the jobs you were talking about, there's a case for saying that countries like the Czech Republic, also Poland, yes, they're struggling with high inflation, but they have the luxury of having very low unemployment.
Is it a luxury?
Sorry?
Is it a luxury?
Well, it's a luxury compared to some other countries, I would say, where unemployment is a very hot election topic. Is this something that the governments should be using more actively? There is room to change the labor market model in a place like the Czech Republic, or is that just not possible?
It's a very good but a very complex question. I can speak about my own perspective as an entrepreneur and someone who employs people and would like to hire hundreds more, but it's very difficult to find them. And I would say, the renewable energy industry, I think the average salaries are much higher for the same level of education and training and skills than manufacturing industry. But still, we've been through a period. It was really strange here in Czech Republic because our two ex-presidents, one was very famous for denying climate change. Mm-hmm. He wrote that it's not green but blue planet, and that everything about the environment is just very manipulative and so on. This was his official position. And our ex-president, Mr. Zeman, also was not a huge fan of doing sustainable actions. So I think this is something that is still in the heads of the public here. And what we see, we do have a retail operation. We do also serve end users. We install photovoltaic plants, heat pumps, and battery systems. And when we really discuss with them about their inner motivation, usually it's not environmental. It's more about, I want to be independent. I want to secure myself against the unpredictable future, and I want to save some money. So it's more utilitaristic and more like security or basic safety kind of motivation. And sustainability, it's very different with the very young generation, like people around the age of my daughter. She's 16, she's doing protests, Friday for Future and so on. She's pretty active. But with the generation of 30 plus, I would say they are hugely affected by this public atmosphere that we were living for 16 years. And it's also the problem with the employment market, because we are offering better salaries, better jobs, but people are still like, but it's these renewables. So some of them are still thinking in this way. So
how do you overcome that?
We communicate the benefits and the word of mouth of our employees. We try to take good care of them and offer benefits. And we also are partner, and we co-founded the Modern Energy Union, which is a platform that is joining all renewable association with industries. I think it played a huge role of trying to change the public appearance of modern energy technologies and renewables and so on. So we are trying to cultivate the environment, but 16 years is a long time.
A long time. Maybe Hans, I wanted to ask you, you told us the story of how Shell was behind the trading of emissions and used a sulfide trading model from the US. How much do you think the oil and gas industry is trusted as a player for positive change? And what can they do to overcome that? You know, I have the feeling, for example, in Poland, there is an energy transition going on, but there's very little faith that companies that still have, in some cases, coal assets or are heavily reliant certainly on some fairly dirty energy should be the actors of this. What can be done to overcome that? I think many people would be surprised to even hear that Shell ever tried to help solve any issues relating to climate change.
Well, of course, it was a choice between bad and less bad.
Right.
I think there are oil companies who would prefer no trading for carbon emissions at all. But we sort of realistic, or that's what society wants, then what is the best model to have that? I think that you probably know, are familiar with the Edelman Trust Barometer as well. I mean, we're now all-time low in trust. I mean, in the oil and gas industry, it is very low. In politics in general, it is pretty low.
Journalism too.
Journalism too, because of the fair and the good was accepted. But you get tarred with the same. So no, that's. I mean, people are pretty indiscriminate. If you're an oil company, then they're all bad. And so people are surprised, what, you did that? And you behind this? I mean, how can it be, you know? Some people will say, well, what are you doing now? Are you now self-flagellating yourself, you know, to earn your space in heaven? I think the real problem is that both the citizens, national governments, and the European Commission, and actually it's all, but I just spoke about Europe, suffer from reality blindness. And that is a very big malady. For example, he's left Pavel now, he did a very good presentation, but on there, and you'll be sympathetic to that, it said post 2035, you know, vehicles will have 0 CO2 emissions. Well, then those vehicles will be bicycles. Because cars cannot have 0 CO2 emissions. You think that because an electric car does not have an exhaust pipe, there are no emissions. No, 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 that's exactly the same problem as with ETS. We've relocated the emissions. And that's actually quite a pleasant feeling for quite ostrich-like beings like the Homo sapiens, because if we cannot see the pollutions, well, then it's clean, isn't it now? I mean, if you see what's happening in the Democratic Republic of Congo, where teenage girls and boys walk on slippers, so with their bare feet, through the mine sludge of cobalt. Now, for those that don't know, your skin is an organ, just like your heart and your kidney and a liver. Your skin is an organ, it's open. If you walk through poisonous sludge, these people will not achieve the life expectancy that we have. Many of us don't even know about that. So we feel very comfortable driving around our electric car. Perhaps what will help is that the general myth is that renewable energy and electric vehicles over time will get cheaper. Now, the reason why many people believe that is they only look at part of the curve, and they do not look at the total of the curve. So the reason for example, solar panels, and you'll know that very well, have become cheaper. The biggest price drop was when the production side for solar panels went from Germany to China and from the turbines from Denmark to China. So basically what I'm doing, I'm substituting expensive German and Danish labor for cheap Chinese labor. That we cannot do again unless you come up with another China that's even lower there. So that's a one-off. Then we got 2 more factors. One is that technological improvement, efficiency. They get better and better, you know, they look better and better as well, no longer the shiny thing. So that gives you marginally decreasing cost advantages. Scale helps as well. If you do a park with 100, that is more expensive than you do a park with 1,000 or 10,000. So that is a scale, but that also is marginally decreasing benefit. Mm-hmm. Now comes the 4th factor that is outside our scope of vision, is where does all this metal come from? The sun and the wind are for free. We agree on that. But you know, these lights do not work on photons, they work on electrons. So first of all, I have to capture the wind or the sun. Then I have to convert the air movement or the radiation into electricity. That's conversion. Then the sun is shining during the day, but the lights are on during the night, so I need storage, cobalt. And then, of course, I need to bring the electricity to where you want to have it. And by the way, electrons do not go through the pipeline infrastructure that we have through Europe. We need a copper structure in for that. Now, to give you just one small example, we went to, as the think tank that I work for, we visited Anglo American, Billiton, Rio Tinto, you know, those big mining companies. And we asked them what was the quality of the copper ore or any metal ore that you were mining 100 years ago. 100 years ago, the average quality of copper ore in the world that was mined was 2%. So that means in 1 ton of copper, there was 2% copper ore, there was 2% copper. So if you want to have 1 ton of copper, you need to excavate 50 tons of stone. And then we said, how much is it today? Do you think, by the way, it's more or less than 2% today?
Much less.
Of course, it's much less. It's 0.5% now.
We've mined the easy stuff.
Exactly. We have taken all the low-hanging fruits. Now we're standing on a chair for the high-hanging fruit, and when that is gone, we need a ladder. Well, I happen to have a ladder, but when that's gone, we need to call the fire engine to bring their ladder. We get the same apples, we get the same copper, but it will get more expensive. So it is an anomaly. It's an expression of reality blindness. That electric mobility would not emit CO2. By the way, let me state for an electric motor is much more efficient than an internal combustion engine. There's no doubt about that. But the problem is they will only get more expensive. Whereas there's still improvement in, for example, with Euro 7 diesel mild hybrids. That if you take a systems look, CO2-wise, they are better than electric vehicles. And the scope for improvement there is positive, and the scope for improvement with electric vehicles is negative. Now, I'm not saying that we should not do it, but look, there's another reality blindness, Raphael. So we want to get rid of this fossil Russian cocaine. So what have we thought of? Well, the doctor actually recommends a heroin cure from China. Well, I'm sorry. I mean, we want to cure a cocaine habit with a heroin cure? Because the problem is that, and again, Fadi will know that far better than I do, in these wind turbines and electric motors, you need good quality magnets. And in order to make a good quality magnet, you need neodymium. 82% of the world's neodymium happens to be in China. And over the last 30 years, China has very successfully engaged in what we call natural resource colonialism. They did not occupy or invade Mozambique, but they gave a loan of a few billion to Mozambique, which they then could not pay. I said, well, you got problems with the interest payments, and now you cannot pay the capital. So, well, sorry, it was not a grant, you have to pay this back. Well, if you really cannot pay this back, look, I got a piece of paper here. If you sign here, that you sign over the property rights of your copper mines to the Ministry of Natural Resources in Shanghai, then we're okay. So our prediction is that in the 21st century, the basis, the pylon of geopolitical power of China will be over natural resources. And so we talked about CBAM, Carbon Border Adjustment Mechanism, which is good news. This week there have been many conferences in Brussels about Critical Raw Materials Act. And then they say, well, you know, we will not take that oil and gas from China and the Middle East, we'll get the materials. Well, those of you that have traveled, and I know you have traveled because you told me last night that you were in Sydney, you've seen those postcards where Europe fits into Australia. So Europe is a very small geography, but it's the biggest market in the world. So energy density, if you understand the concept of density, what I just said about ore was also density. It's a very poorly understood concept, but the economic density of Europe is very high. We cannot live, we can never be import independent. And also, two sort of one-liners that I want to throw out. Renewables cannot power this society. It can power a society, but not this society. And the second thing is, I mean, about energy, the fossil energy that we're used to is 500 times too cheap. A fair price for 1 liter of petrol would be 1,000 euros. Can you imagine what our world would have looked like if the cost would have? And I can explain why it is, if you want, but I won't take up time.
No.
But you know, if it would have been, the world would have looked very, very differently. So what we should do now, we should build a society that can deliver well-being to people with much less energy consumption.
So the pricing is one of the main tools.
Of course.
I wanted to ask Fadi
Can I react?
Absolutely.
You remind me so much. My favorite author, Václav Smil, is Czech origin.
I'm an admirer of Václav Smil.
He's great, and I think this is very, very needed, the critical thinking, and I agree in a majority of what you said. I disagree in few points. I really believe that we have technology that is able to mitigate this price increase. We don't need to use cobalt. There is a lot of alternative technologies appearing, and some of them are getting mainstream. So I think there will be some surprises. I will not say that 100% the price will only increase, but what I do agree with is like there is a lot of myth and a lot of buzzwords around. Like for example, you know, like seasonal storage through hydrogen. The overall physical efficiency of that process is 30%. Yeah. Water, gravity, 75. So like there is a lot of good reasons for being skeptical about the sustainability ideas and efforts, and a lot of myths there. So
if we talk about the relationship, you know, industry, government, we talked about the pricing is one, regulations another. And then in the previous presentation, we talked a little bit about the funds, subsidies. So these ETS redistribution funds, if I understood right, it's 4 billion euros or the equivalent of in Corona here. Fadi, what would you spend that money on if you were the person who could actually choose the industries and the places to spend it on?
I'm running around Czech Republic since 2015. Trying to speak with everybody, trying to say, hey, there is a tsunami of funds coming. Let's prepare a bit, yeah. Yeah, nobody was listening. So right now, I think it's not about throwing more money. You know, it's like pushing someone who doesn't have any training to do 100 push-ups one time. We don't have the capabilities, we don't have the capacities, we don't have skilled workforce, we don't have enough education, we don't have enough preparation in the grid. There is so many restraints beside the money that are a much bigger issue from that is not allowing us to deploy as much renewables as we would like to. So thinking that you just threw some bunch of money and bunch of regulation and you will have a quick solution is like, I see that in a corporate world as well. Like, let's put the targets. Let's increase them. Let's do them double. Yeah, it's really nice wishful thinking, but it's not how the work operates. We need to adapt in the educational system. We need to really do the hard work to ease the regulation. We need to think about the vision. We need to think about how we're gonna change and transform the grid to handle all this. And we didn't do that job yet, and it will take time. So throwing more money is not, I mean, everybody loves money, but it's not the real solution for the transformation.
We have 5 minutes left. I wanted just to open the floor if possible. I know hungry audience is an unhappy audience, so I'm trying to finish on time. Is there anyone who has a pressing question? And could you please tell us who you are and who the question is for? Thank you.
Sure. Is it working? Thank you very much for a highly engaging panel conversation. My name is Corina Murafa. I'm representing here at the conference the Sustainable Investment and Finance Association of Romania, my home country. But I'm an independent energy policy analyst and an academic in this area, and particularly for the Czech members of the panel. I was wondering, what's your experience in the Czech Republic of engaging entrepreneurs, SMEs, or even larger companies around all these developments that seem to be coming somehow like a wave over us, from CBAM to no diesel vehicles from 2035 and so on. Then the reason I'm asking is because I recently came from the most affected regions in Romania. Last week I was there, the ones that are going to benefit, just as Czech regions will benefit from JTF funding. And I've noticed doing policy work there, and I've noticed a huge disconnect between the policy circles in the capital, who know what they're talking about, or at least have a clue what CBAM is and what's going to do to local productivity, competitiveness, and that business model needs to change, and the local level, where even large entrepreneurs seem to be completely oblivious towards what's going to happen, and essentially that they need to act, and they need to act fast. So I was wondering, what are some lessons from the Czech Republic, good practices, ways of engaging entrepreneurs and stakeholders at the grassroots level around the energy transition?
I would say the situation changed a lot after the war in Ukraine and price increase. I think that was kind of wake-up call, but still it's too fresh and too intense, so there was no time to proceed it correctly, but it really grabbed the attention of everybody. You know, we need to think about the energy in a different way, we need to think about the regulation, we need to look out what's going on, because it's really starting to affect us hugely. But to tell, like, if I observe some SMEs which are owned by Czech owners, some of them are really motivated on sustainability and they put the effort to go in that direction. They hire people, they get the information, they're trying to also cultivate their environments, their supply chain and so on. But when it comes to large corporations or corporations that are owned by foreign corporations, like for example, even banks and so on, I think from my taste it's very slow, and it's also, we have the same experience that they are not really aware of what's going on.
If I may somehow combine a few things that were said and also our discussion before the panel, education and engaging academia is crucial, but also education and also trying to convince and to attract startups and, well, not only researchers and developers, but also people who want to make a business by inventing some new solutions. In our case, obviously it's around recyclable packaging or new delivery methods. So it's something that might be embedded into the business and incorporated into business. But making this area and the space and engaging SMEs, but startups and new developers to be engaged and to deliver some new solutions. I think, at least in Poland, there is a great appetite for this kind of cooperation between the small and innovative companies like startups. And we also invest very much into education and mentoring them and to showing them how they can put their ideas into business solutions. So far, we're just beginning our journey in Czechia. So I hope that we can have more data and more experience soon. But I really hope that we will be also a big partner and a reliable partner for SMEs and for startups here in Czechia, and we can do something together because it's a team game, sustainability.
May I say something about education here as well?
If we keep it short, yes. You're not eating into the lunchtime.
No, I completely agree with that. We actually have in all the CEE countries, we have some platforms. I'm also Europe's STEM ambassador. STEM stands for science, technology, engineering, mathematics. Yes. Of course, the work that you do and you do is very good, and that I do to talk to boardroom people and policymakers, but we really should talk to the 12 to 18-year-olds. Because that is where system thinking has to become a competency, otherwise we cannot reach the other end of this century in a civilized and peaceful way.
Thank you very much. Thank you again to the great organization of this Sustainable Finance Summit for all the hard work, and thank you for the great conversations we've had, and especially thank you to my panelists today. Thank you.
And I thank you for the super moderation as well, Rafael, and to Hans, Fadi, and Marta, thank you so much for the contribution. I'll keep it very short before the lunch break. I'm conscious this is a very crucial time. I think this panel really well demonstrated and really amazingly distilled some complex information, and also CBAM and some of these new concepts which we are hearing about. I think probably I have never heard it so really well explained and put into practice. So I really hope you also appreciate that and you agree. So as I said, we will now have 1 hour lunch break, and we will then meet here at 12:30. So enjoy the lunch, and we'll see you soon.
Mazars is a leading international audit, tax and advisory firm fully committed to play its part in creating a fairer and more sustainable world. Our people all over the world are dedicated to helping clients mitigate risks, operate transparently and grow responsibly, while always keeping the public interest at heart. Now, more than ever, organizations must ensure the actions they take today are the right ones for the future they want to build. Acting now for what's next.
Hello, hello. Good. Welcome back after lunch. And the next panel will have a difficult job to keep the room energized after all the food, but you're in really good hands. And also a very efficient panel already sitting behind me, so I'll keep it very short. Now the third section of the day and third panel discussion of the day will be focusing on a very important topic, which is definitely becoming more and more popular and discussed, and should be discussed even more often, and you'll hear why. And we will be looking into sustainability in real estate and how we can rethink real estate and how we can actually make sure that also real estate and buildings are sustainable and are not contributing to greenhouse gas emissions in the future and are actually net zero. So without maybe any further ado, I will give you, I'll give the word to the moderator of the panel, and that is Raul Garcia Rodriguez, who's the Director for Sustainability Services at Deloitte for Czech Republic and Slovakia, and also CEE Sustainable Real Estate Leader. The floor is yours.
Thank you, Julian, and thank you very much for organizing the panel and organizing such a great event once again. So it was great last year, it's been great this year. Let's make sure that we also have a good panel. We're very blessed with the panel that we have in here with very good real estate, very seasoned real estate people that I will let them introduce themselves so they can say something about themselves, and then we will kick off with some questions that I have ready. Please, if anybody has a question for any of the topics, there is a Slido working, right? And if somebody has something that you cannot wait, then raise your hands, and we have some microphones so we can make this a little bit more interactive. So, Richard.
Yeah, hi. Hello, everyone. My name is Richard Wilkinson. I'm the CFO and Deputy CEO of CTP. We are the largest listed owner of commercial and so industrial and logistics real estate in Europe.
Thank you. My name is Stefan de Gooi. Good afternoon, everybody. Thank you for the invitation. I'm the chair of the advisory board RICS Czech Republic. We have approximately 120 members, professionals here in Czech. The RICS itself is much larger, with 150,000 members all over the world globally, and we share and cooperate momentarily with certain bodies like the World Green Building Council on terms of ESG. I have a long history with my neighbor as well, with CTP, where I acted as a sustainability officer for the group, and currently I'm freelancing in the ESG world.
Patrick.
Hello, everyone. Hello. My name is Patrick Choleva. I am CFO of Skanska Central Europe. So it means that we have like 5 countries for that conference, from the Poland down to the Czech and Slovakia and Romania, Hungary. I'm coming from construction business, so not so much from developer side, but we at Skanska, we have both streams, so developers for commercial and residential, and also for construction. But I will try to give you some hints also from the construction side, what we can do, what we are doing in that sustainable area. For Skanska, for us, this is the major topic and one of the major focus which we have in our long-term history, as we are coming headquarters we have in Sweden, so we are like a, I think, clean, green, Swedish, nice company. So that's what we feel that we are. Thank you.
Hi, good afternoon, everyone. My name is Omar Sattar. I'm very happy to be on the panel today. I'm an independent property consultant, but one of the things I do is I'm a non-executive director of a very large property company called CPI Property Group, and I also chair their ESG committee. Briefly about CPI, they have about 6.5 million square meters that they own across about 11 countries. They cover offices, hotels, residential, retail as well. They also have some agricultural land, and they even have a ski resort as well. And they have quite a defined policy or pathway on how they want to approach the ESG world. So I'm sure we'll touch on that. Thank you.
That's great. So as you can see, we have a very broad map of what we can ask them, and to know from all sides of the business how can we embed sustainability into real estate. So I'm going to start with Richard, because Richard has a past in the banking industry with the bad boys, and then he came to the worst ones, who are the real estate guys. And I would like to be a little bit controversial. I know he's going to be, and to dare him to tell us how the capital could or could not, or is an enabler or a blocker of the transition into more sustainable real estate.
Yeah, so if I look back, I've been with CTP for 5 years now. Before that, I was with Erste for nearly 30 years. And I used to run the largest real estate lending business in Central Europe. And when I was making decisions then, green ESG was not really a topic. And I would say that it wasn't really a topic for the first 3 or 4 years that I've been with CTP. If I start talking to the banks now and say, guys, I would like to borrow some money, bond markets are not really very attractive at the moment, they will turn around and say, yeah, Richard, great, we love CTP, we love everything about you, great portfolio, all of those things, but I need to know that what are you doing concretely in terms of improving something to do with ESG. And all of that comes from the ECB, which is requiring the banks to prove that the new money that they're lending is doing something to help improve ESG, however that is done. Yeah, and increasingly the banks are asking for rather concrete things like EPC certificates and improvement in energy efficiency. So the days in the past where you could say, okay, I've got my BREEAM certificates and this is all I need, they're moving into the past. And one of the things I've been saying for some time is people are going to have to start actually showing what they're actually doing to actually make an improvement and not just write things down in a policy and say, I'm green. So, you know, that's the real change that's happening, and that will force a change in the real estate industry over time, because the real estate industry can't survive without funding. So no one is going to do real estate with pure equity. So as soon as you want money, you're going to either take it from the bond markets. Bond markets are increasingly looking for green bonds, but with real links, not just something where I say I'm green, but someone is really coming in and auditing what you are doing. So the chance for people to just say I'm doing it, those days are going away. So yeah, we'll know that what will drive people actually doing things going forward, and Stefan was one of the big drivers for us in being a leader in the industry. Now the banks are going to force everyone else to do it as well. So, you know, just saying it is not going to cut the mustard anymore.
So you already mentioned Stefan, and I was going to ask Stefan to link. You've worked together in CTP. Stefan has worked also as a consultant, and now is working with risks. And I think Stefan is very well equipped to tell us how this green finance can bring an extra. We talk a lot about green premiums and brown discounts. Do you think this is happening already, or it's not yet implemented in the market?
Not yet. No, it is coming, but it's not there yet. It's not yet implemented.
Here we go.
It's coming. It's here. It's now. The loans that we're signing now have a green discount. So if we hit certain criteria, we get a lower margin.
Yeah, so and what they are asking, so what we were doing is on a certain KPI level, because what I felt also with my time at CTP, it's for the banks, it's also a course. They're on a road, also exploring, asking even the developer, CTP in this case, what would be your best practice, what could you deliver to us, and then you go on that road together. So we're absolutely moving in the right direction. but there's still a few steps to make. And I'm very happy what Richard said is that only the policy making, or we hire Deloitte and then we put it in a drawer and we just pull it out whenever it's necessary. Those days are indeed over, because they're really on top of you and breathing in your neck. Yeah.
So, Patrick, you're the CFO of a construction company. When somebody comes to you and tells you, one of you guys tells you, we have to embed something new, we have to add some innovation to what we use here, because there is something that will give us an added value, a sustainability value, but you're the one paying, you're the one footing the bill. How do you assess whether this is or is not a cost that you want to take to there, or is it a cost, is it an investment? How do you look into this?
But it doesn't have to be CFO, and even if we are on Finance Summit here today, so it's about the normal business. It's a capitalism which we have here, so it needs to bring some business case at the end, the project, which you build. So you need to find the client. And now it's very difficult to find the client who will be able to pay it. Because if I'm from construction company, so we can build whatever you would like to have, but we need to be able to sell it. Mm-hmm. And if we will start to implement some sustainable products there, we need to find a client who will be able to pay. Mm-hmm. And there are some clients. It's not that there are no clients at all. Even at Skanska, we have, as I said, two streams. We have developers and construction. And our developers for commercial and residential business, all these projects which we are building, they have all certificates, BREEAM, LEED, WELL. We are doing the top class, the products in world, not only here in Central Europe. I'm convinced about it. So, but anyway, it's still difficult to find the client. But we are finding the client. They are mainly from Western countries, investors who are going to buy it. But to convince for residential the family to buy flat, which is 10% more expensive because it has some sustainable issues there, it's not so easy. So we need to go step by step and to find even solutions which are cheaper, I can say. So I know it was today even discussion. But there is another aspect which should family look, and also the big companies. Look at the whole life cycle of the product. Mm-hmm. Not just what does it cost today, like 10 million cost me the flat, but then I will need to pay for energies, water and everything. But if you look at the whole life cycle, you see that you need to pay something now, more, but then you have a lot of savings on the way. So it's valid also for the whole building, for the whole offices. So you need to look from the whole really life cycle and not just the purely what does it cost today.
Right. And I'm going to now reach to you, Omar, because you were talking about the experience with many different types of real estate, different usage for the types. Now, in which of those uses, or which ones are the ones that could be drivers to show to the rest? Because in the end, when you produce real estate, it doesn't really matter which kind of real estate. There are certain structural things to do that you always have to do. Where do you see more traction into it? It's more into residential, into the commercial, into infrastructure?
I wouldn't say any of them are leading. I think all real estate sectors have an ESG agenda. I don't think any of them are particularly perhaps leading the way at this time. You could maybe say that depending if you're in an older warehouse and you're manufacturing something, then your carbon footprint might be more intense than an office building, for example. But that's around consumption and energy use. So I think all sectors are trying to address their carbon footprint in different ways, and the whole market is at different speeds. Mm-hmm. I mean, you have a panel here which have a very embedded or sophisticated, by market standards, by comparison, sophisticated look at how ESG needs to be addressed. But there is a whole element of the market, and I couldn't put a percentage around it, which isn't quite sure what to do, isn't quite sure how to do it, isn't quite sure what standards they should be following, and isn't quite sure of the benefits yet. And there's going to be an element of education around that, and awareness, some standardization, which allows people to compare things. So that's going on, but maybe that's not addressing your question. So I don't see any leaders yet. Originally in the sustainability world, in the commercial world, the the pioneers of sustainability was in the office sector. But then sooner or later, the other sectors started to catch up: warehouse logistics, retail, and residential.
So then I turn the question to Richard. You were talking about the tenants. Richard, you have tenants all over Europe, almost and across and above, beyond Europe. Where do you see more sensitivity in your tenants? Your tenants are big companies. They need big industrial premises for logistics and for production sometimes. Where is the biggest sensitivity? Where is something that we can look and say, these guys are ahead?
Yeah, well, most tenants will tell you they're going to pay more to be green. Sorry to say that's bullshit. Sorry for swearing, but it's not true. For most, there are a limited number of clients now who are really starting to say, for my operations, I really need to have, by 2030, carbon neutral buildings. They are the very large 3PLs that have the same constraints that I mentioned earlier. Their investors, their financiers are saying, you need to be green, and you need to actually do it. So if you look at a DHL or a Kuehne + Nagel, they have a very clear policy that they then also communicate to their landlords and say, this is what I need your buildings to do. And if your buildings can't do this, then by 2030, I'm moving out or I'm not taking new space with you. But that's a very new phenomenon. Most people will say that they will do it, and they will not.
I see. And then I was seeing, Patrick is...
Yeah, I hear what Richard was saying. Yes, there is a few clients, but more and more, they are coming. Like every year is more and more. So if I remember the clients, ESG, so even today, a lot of them that doesn't know what does it mean. They are now good at spelling, at least. It's helping, but it's going step by step. It's more this client. And I don't know how you have, but we at Skanska also we have been neutral even earlier than 50. We are 45, and we are working on that already now. So there is a lot of things which you can do, and I think the big companies, they have a lot of them to have such ambitions as well. And we will be pushed by that. So, and this is the market need to create the demand for that. Yeah. We as I don't know, developers, construction, we will not do it so easily when the clients will not demand it.
It's a push on your supply chain.
Although there is statistics around this that buildings with the highest level of sustainability ratings in terms of LEED and BREEAM achieve higher rents than other buildings. The numbers I've seen are around about 6%, and in some markets as much as 10 and 15%. So there are examples where people or companies, organizations will pay you a little bit more to have a more sustainable building because it's within their own policy to be carbon neutral by a certain date. So there's been a lot more focus on this in the last 24 months.
In offices especially.
Yeah, and so, we'll see if that pans out going forward.
Now, one of the things we always talk about is total cost of occupancy, because the more energy efficient the building is, which goes back to your point, Patrick, the cheaper it is to be in the building and operate it. So, one thing is the rent that you pay. The other thing is how much do you pay when you're actually in the building to run your operation. And if you're running in a much more energy inefficient building, you will actually spend a lot more being in that building. If you're in an old flat that has no insulation, you pay a lot more for the heating than you do in a new one with the right construction standards. So you have, there's a huge benefit of the investment up front. But if my head office is saying you can't pay more than this much headline rent, okay, then I will rent the inefficient building, and it will cost me more over the next 10 years. So that's not smart from the tenants, but that's the way that people sometimes think about it. They think about what's the short term, not the long term.
Yep.
Yeah. So it's very important to make it visible for them, and possibly also give a guarantee on that, or put money where your mouth is. So then you go towards green leasing already, or saying, I cap your electricity consumption. If you go above €1.20 per square meter, the rest will be for us, because you trust your product, you know it, you did it. So this will the market will be going there for sure.
This is a good point. That you mentioned something on green leasing, and then in my past as real estate professional as well, we had a lot of opportunities where we saw the clients coming to us and saying, hey, we want to touch the building because we want it to be more efficient. And whether it was the envelope, so isolation materials, or it was the installations that we had, in most occasions, we as landlords will not like them to touch the building. So we will have to sit down and put the contract on top of the table and open the green leases and say, okay, who pays for what? And what is the payoff? So if you do it as a tenant, most likely you will like to say, okay, I will do this, so I want a discount in the rent, or the annual increase will stop for a few years, so there is no indexation to the rents, or maybe I'm very happy where I am, so I want the period of compulsory compliance to be longer. It depends on who does that. Whereas if he was the landlord, it would probably be something similar. Yeah, you will pay this, but because the installations, if he was installations, or if he was the envelope, it would be different timeline for depreciation. But there is always this element. Now, Stefan, you have worked on consultancy. Do you see this happening in the region already? Do you see green leases being put on the table?
Yes, absolutely. This is moving fast forward. The CTP is already a good example who took the initiative from themselves. Every moment with a tenant, existing tenant, there's a moment or an opportunity to discuss that with them and have the green lease clause in there. If you have a new lease agreement, you can already force it forward. I'm currently working on a project here in Prague where the owner, landlord, indeed asks me or the consultancy company to give them, let's say, a guideline or suggestions how to put it in there. This is also protection towards EU taxonomy. For example, if a tenant in a larger building wants to retrofit more than 25% on either installations, as you just mentioned, EU taxonomy starts to say already this needs to be, let's say, eligible with sustainable investments. You need to prove that the investment that you are making is really environmental friendly. If you don't have that green lease clause, you can tell your tenant you need to follow this, but if he or she says, I don't know, if you want to pay with me, sure, then I'm open to discuss that, but if you're not paying, then, it's my money, I do what I want, so this is also already a protection for the landlord in this case, but also for the tenant. So yes, we see it coming forward quite quickly at the moment. Yeah.
So then I'm going to turn to you, Omar.
Yeah, I mean, I think it's maybe for the audience point of view, it's maybe important to maybe mention, what is a green lease? This is a terminology that's been used. They were just commercial leases, like a lease contract that you had. Now, as companies are moving to a more sustainable footing, they're imposing or trying to agree conditions within the contracts, or even some sort of partnership agreement. So there might not be any sanctions for not performing, but there's kind of cooperation agreement where there's a sharing of data. There is a way of how the building should be used. There is a kind of a two-way process of dialogue on what improvements could be done to the building, and maybe if there's major improvements to be done, what type, and maybe what impact that would have as a cost to the tenant. So it's just a framework. There's a dialogue between landlord and tenant in terms of how they're communicating, and many more landlords are trying to have these in the contracts that they have. So when they sign a new lease or when they renew the lease of the tenant. So just to give you a bit of a framework of why we're talking about green leases and what do they actually mean.
Thank you. That's a great clarification for everybody. That I then want to bring to Patrick into something, because we're already talking on green lease as an enabler for retrofitting. And we have an issue with the amount of buildings that we have that were produced that are not efficient, that should be changing into something more efficient. So construction now has to think into how are they going to make these buildings more efficient. Some of them have been recently produced in the last 15 years, so you will not consider those already depreciated. They're not all buildings, but they're not efficient. What do we do there, Patrick?
Yeah, of course, all the buildings which are already existing, it's quite difficult to make them even more efficient. So it costs something more. Much easier is when you start with on the green field, with something when you can implement all this stuff in the plan, in the design. Then you can do a lot of much more than to do these refurbishments and all this stuff, which we have as well anyway. But honestly, it's much more easier to start, and if you implement everything at the beginning, it's much cheaper than to make some repairs. Just one example, if I can use the new one which we implemented in one of our projects, we call it like grey water. It means that you are using the water from bathrooms through the sinks everywhere. It's going to the cleaning house in the bottom on the ground floor, and water is clean, and then it's put it back and used for the splashing of toilet. And it's creating 25% less consumption year to year for the whole building. But of course, at the beginning, you need to invest in the second pipelines on that. But once the building is already on the floor, standing somewhere, you will not do it, never. You can just talk about, I don't know, windows and other isolation and so on. But such a dramatic moves you need to do at the beginning of the life of the building.
So if we take from that and we're thinking, okay, there is a cost to do the retrofitting, there is a cost to all this. Big landlords like CTP, would you approach somebody to help you financing this? Will you go to the EU funds and look into it and say, because the EU funds are also there so that the people can use money to improve. And of course, large landlords will be profiting from it eventually. What will be the take of a large company like CTP on EU funds?
Yeah, I mean, I think one of the issues for the EU is trying to make sure they provide the money, but provide it in a way that's not so intrusive that people say, you know what, on that basis, I don't want to take the money. Yeah, if you're going to look in every single thing that I do, I'd rather not take the money. It can't be cheap enough. You're too expensive. Where I think that they are doing the right thing is in terms of providing financing for alternative energy sources. So, we own around 11 million square meters of roofs. So that's, if we can put a photovoltaic plant on all of those, that's 11 million square meters of land that doesn't need to be turned from agriculture into a photovoltaic plant, because I just put a photovoltaic plant on my roof. That land is already not agricultural anymore because we have the building on there. So that I think they're doing well, because the money that they provide there is very cheap, and also, it really, it's not super intrusive. It's only in the procurement process. So that's fine. It's much harder for them if you go into things like renovation and retrofitting, because then you start getting into way more complicated issues.
I'm sorry to hear this retrofitting is a little bit of a problem for everybody, and I agree with what Patrick has said and what you're saying. There's problems and something to amend the wrong. It's worse than to do it right from the beginning. So obviously there has to be a plan, an investment plan from the very beginning that already has sustainability in it. And what we see is that buildings, depending on which use you have, that are basically open today were designed few months or few years back. So I have the sense that sometimes real estate investors or real estate entrepreneurs are looked at great entrepreneurs, because they see that we are not doing things at the speed that the other industries are doing, but the length of the projects, the cycle of life of the project is completely different. Now, when you assess a large portfolio, and now I'm going to you, Omar, you have a large portfolio of different uses again. Mm-hmm. How can you assess that the value that you're bringing into bringing sustainability will resound at the board?
There's a couple of things which come into play then when you're doing this analysis. First of all, if you are retrofitting or refurbishing a building because you feel that either now or in 2 or 3 years' time it's going to lose interest from occupiers. So occupiers might require a certain energy certificate or a certain sustainability brand on it, like a LEED or BREEAM, in order for your building to be competitive or to be a place where they would like to work. So if you don't do it, you're at a loss of missing out on that tenant. Then you have the loss of missing out on that tenant, and the loss of missing out on that income. The loss of missing out on that income affects the capital value of your property, affects the capital value of the property, impacts how much, if you are borrowing money from the markets, how much you can borrow from the markets. So there's that element of it. So that analysis is taken into account. So if you don't do it, what are you going to do with the property in 5 or 10 years' time? Then there's other reason to do it, or you could look at it another way. It's a way of preserving capital value going into the future. So it makes your portfolio more robust, more resilient in terms of property values, whether it be held or increased. And then on an operational level, we touched on this already, by doing those improvements, it creates benefit from the occupiers from the point of view the cost of their consumption is less. So again, this feeds into the thing about it being a more attractive building compared to one that hasn't made those climate-adjusted changes to the fabric or to the construction. So these are the kind of discussions which go on. These are the kind of inputs which are then run through cash flows and then presented to the board. So yeah, we at CPI have a very diverse portfolio. Some of it is quite old. I think average age could be somewhere around 25 years, 30 years old, some of the building. Not all, the average age is about 25 years across the portfolio. So we have some assets which we know we're going to either have to repurpose these assets, demolish them, or sell them. Mm-hmm. Because for that particular asset, given where it is and what it is and where the market's going, we don't feel that the current use is sustainable in 10 years' time or 5 years' time. So we're continually having to look through that and kind of streamline and prune the portfolio and make some changes where we can.
Right, and I'm going back to you, Stefan. I want to understand also, I want the audience to understand the role of the policymakers, the legislators, into how, because we're talking about efficiency as a driver for sustainability, which is great. But we have another driver for sustainability, which is the legislation, mm-hmm. What we're obliged to do. Of course, the legislation is created to create more efficiency, to green the economy, but some people will look into it only because they have to do it, mm-hmm. Because it's compulsory. Where is the balance? Do you think there is a balance already in between what is compulsory, what are the carrots and what are the sticks? How do you see this in the market?
Well, just to add to Omar as well, what we see at the moment also with RICS is that there's also an ad hoc decision that is currently made. So this is where an investor wants to exit a building and does a risk analysis and see, okay, if I don't do these 5 or 6 actions to reduce my carbon footprint, I will get, let's say, discounted, because the new investor will ask a discount for the fact that she's doing the ESG analysis and just covers that the capex is not, far enough to reduce that carbon footprint. That's one. For legislative, we see the EU taxonomy is coming towards us, is already here, although the translation of the EU taxonomy takes time. This is where RICS is also working with let's say, the local green building councils here in Czech Republic, the Czech Green Building Council, with several lawyers looking at, okay, what does become compulsory at what year, and this is really still vague, and this is why companies like the 2 gentlemen next to me, they're the pioneers in that sense, saying, okay, we're not going to wait for that, we're going to do it because we see the problem already coming from miles away. As where a large part of the market, and you were mentioning a percentage, I don't know, could be 50, 60, maybe 65% of the market still says, in the CEE, like, okay, let's see what will happen. You know, we're not that large. You know, our leverage is not that big, but we know examples. For example, I'm Dutch, so from the Netherlands, where the government also took the initiative, not waiting for EU taxonomy, but saying, listen, we have our own governmental decision made in 2050, we want to be circular in the whole country. Well, good luck, guys, and I'm Dutch, so. But they say, okay, we need to push that commercial area faster because there's money available. They need to improve that stock because the carbon footprint of the real estate is large. We know that. It goes towards 50% if we look on global level. So what if we take those landlords, those owners, and push them? We say, okay, offices cannot be lower as a C rating, the PNB in Czech Republic, or energy performance certificate in a more global term, needs to be on a C rating, which is already quite a significant level for existing portfolio. For standing buildings. So it means if you want to continue having an office, you need to invest money. You need to have you need to take the glass out, put double or triple glass in there. You need to maybe redo your roof and put thicker insulation, heat pumps, other kinds of let's say investments like building management system with your air conditioning also going to well-being inside the building. So. Legislation, yes, it's coming. We don't know when, and then we come to the carbon real estate monitor, real estate risk monitor, which is being done in a lot of companies now as well. It's CRREM, is where per asset, per building, or per portfolio, we calculate where the stranding risk is, and the stranding risk of a building means that they are not complying with the Paris Treaty 2030. I hope for most of you that rings a large bell. This is where was agreed, okay, if we go on the decarbonization road of 1.5 degree increase, we can calculate for a building when that building is not complying anymore. For a lot of buildings, this is next year, the year after already. And then you see, okay, you need to invest this kind of money. Big changes, renewable on-site. As Richard just was saying, the best thing is just put solar, wind, or whatever you have in access. We have squeezed a lot of water, you know, generate renewable energy to reduce that carbon footprint. And then you see the stranding risk immediately 10 years forward. This is for investors also interesting, saying, okay, for your risk management, I can invest. And that also comes back, and it's probably the last I need to say about that, is also which country are you in? We're in Czech Republic. Not so great, because our national grid here, Poland, ouch, you know, but there are other countries like Sweden, you're much better. So in your calculations, your asset is much better in that country than here. Yeah. So yeah, the forces are coming, so the carbon tax probably will come, so yeah.
We have heard about this. Patrick, please.
With this legislation, you are right how you are saying, but I can use another angle of legislation when we think that they are a little bit slow with the reality. Because we at the Skanska, we invented together with Technical University product, we call it Rebetong, what is like a recycled concrete. So it means that you demolish whatever, and then you recycle the stones again, you have the machines and so on, and then from that you create again the concrete. But now, what is according to legislation, we cannot use this concrete, because it is not was produced according to norms which we have from the stones like that, from the quarry there. So we have the same quality, we have the same efficiency, it was measured everything, but you cannot use it for the highways, you cannot use it for the buildings. So it's the norms could change as well with that, and you know, it's helping this recycling economy. It would help a lot. And there are just, I don't know how many years behind the reality, and it could help for free. And even it is the same price, even cheaper, but we cannot use it because it's not according to the norm. It's just another example, not only from real estate, but also from the standard highways.
It's a very valid point, because we have to add some innovation to the things that we were doing before so that we do it better. The problem is that innovation available everywhere? Because we are all very international here, from very different countries working. Some of us are from international, I mean, from abroad, but working in local companies. Some people, you know, I think we have the whole thing. In some places, legislation and the market will be there if you come up with a new idea and you want to put it out and you prove that it's workable. But what I hear, Patrick, is that it's not the same in here. Do you think that this kind of innovation will be available and open to use in other places rather than in Central Europe? Is Central Europe a laggard in this? Are we running behind?
No. Of course, if I look at Scandinavia, where we have a lot of examples, there are some in some areas in front of us, but we have also smart people here and a lot of people here in Central Europe. It was in Poland, I know in Slovakia, create some new stuff, so which we are transferring. And if you are in the big company, we are of course sharing a lot about these experiences. And one example which I had last week, we had a big conference in Stockholm. We had a very nice building in Norway, powerhouse, and it's producing more energy than consume. So this is creating energy, whole building with the solar panels, with other stuff, that even selling electricity to the railway station, which is the closest one. Yeah, so, but now it is expensive. It's not like that everybody wants to buy it. Yeah. So, but we need to find a way. But there are the buildings which can create even more energy than is needed for that building. Mm-hmm. So that's what we need to share as well. And it's across the countries. And maybe one last comment. There are some colleagues from US. And that is a big move. So here we have some progress, but in US I heard it was like a big jump now. Now a lot of companies a lot of clients talking about sustainable issues. 6-7 years ago it was nobody cared even. Nobody wanted to even to pay any cent for that. So it's a big move now. Where it will end, difficult to say now.
So then, Richard, Omar, large portfolios. What will it take for you to go to the board, to go to your peers and say, I want to embed this innovation? It's on early stage, but we know it works.
Look, I think what you do is you pilot things. Now, one of the advantages of not being the first person to do things is you don't have to pay the cost of learning for the mistakes for the first guy. So the building that you built in Norway that is energy positive cost an absolute fortune. The next one will be a bit more efficient. The third one will be even more efficient. The fourth one may even make some money. Yeah. So I rather try and build the fourth building, not the first one. Yeah.
Banker.
We are a for-profit company. But part of what you can do is you can also say, okay, but we can pilot stuff. We can try stuff. Let's see what works. Maybe you say, okay, well, let's try and build the greenest building in the Czech Republic, which we just did. So you try and put some stuff in there and say, okay, then how do the returns work? What can we do again? What could we take from that and put into the next building and the one after that and the one after that? So it's about trial and error, but you can't just say, okay, we're going to do everything everywhere all at one go without having a business case, because that doesn't work.
So the business case is what the board looks at, right?
Yeah, no. I mean, at CPI they're doing it. They're not doing it cross-board. The CPI is not really a development. They do develop properties, but it's not the mainstay of their business. They tend to buy existing buildings and do some development where they have a land bank. But there are two examples in the Czech Republic of office buildings, older buildings. One of them built in Prague in the 1930s, in Prague 7, next to the Magistrala or the Wilsonova. Listed building, so heritage protected property, and they took off the facade, the old facade, put on a new facade, changed all the internal ventilation, plumbing, electricals, lighting, ventilation, air conditioning, heating. The building is 30% more efficient than it was, or maybe based on some calculations, might be more after the building has been used for a couple of years. We'll be able to monitor that. So I think the word making a case or a business case. So it is happening. I like to talk about the reusing or recycling construction materials. It's another big step forward for the real estate industry. A lot more companies are looking at those things, looking at timber construction. So looking at lumber, aggregate lumber, or somehow putting it through a process, and the integrity, the structural integrity of those columns are the same as concrete, and they're fireproofed as well. Yes. Also requires less load from the foundation, so less concrete required in the foundations. And you see more and more of these buildings being built across Europe and it's coming here as well. People are talking about it in Prague already. I think Skanska might be one of them that are talking about it. So you see that it was mentioned, copying others. We're seeing changes in other parts of the world. Those changes are being adopted, maybe slowly. I think we would all like to move faster than we can, but I think sometimes financial reality and sometimes even local legislation, regulations, which are an obstacle, are not helping. But there is a positive side. I feel there is a movement within the real estate industry to look at these with a much more open mind than in the past and try things in terms from a sustainable point of view.
Yeah. So on like the timber buildings, we can build a warehouse with timber instead of concrete. I just can't get a fire permit for it. Because according to the fire brigade, timber is flammable and concrete isn't.
That's a very good example. This is about the mindset as well, because from the timber, from the wood to build a house, this is absolutely normal in Scandinavia, in the north of Finland, Norway, where is a cold like
different kind of fire.
But
there.
we are not. But in Central Europe, it will be too cold. No, we cannot have from wood my house. So I need to have bricks, everything. It's totally wrong sometimes mindset, in that. So and now we are even trying at Skanska one timber really residential, and we will see how it will be accepted by the market, by the people, because sometimes it's in the head, and with that we can change a lot. Also, only just changing our way of working.
Yeah, which brings the topic of disclosures. What you do, being able to compare apples with apples, what you do here, what you do there, what you do in different parts of the company, which again, is something that is going to be compulsory for many companies, especially for the large ones. They have to disclose, they have to report. And with good reports of best in class in the industry, the others will learn. So maybe this is the way also to push it towards the legislator in the local markets, to say, look, this has been done already a number of times in Scandinavia, why don't we do it here, if it's possible? Of course, you have to have the technology, you have to import the technology, but we want to do it this way, because also this will help us go back to the financiers, go back to the bank, talk about the green asset ratio that they have in their portfolio, how much are they financing? Because, if in the end there is a blocker either in legislation or in the technology, you cannot do it. It doesn't matter. And maybe one day the bank will stop. So coming back to what this conference is about, which is finance, I'd like to have a 2-minute thoughts about how can we from the industry push the financial industry to help. What is there that we can tell them, hey, this needs to be done, but it has to come from you.
Want me to go first?
Please.
Yeah, okay. Look, I think one of the problems with ESG is if you look at how many different certifications we could take as an organization, it's ridiculous. And depending on which one I take, I could look really good or not so good, depending on what policies I wrote or whatever I did or didn't do. So one of the things that really helps, if you look at the finance industry, there are 3 big rating agencies. They use pretty much the same methodology, and everyone understands what a AAA rating is, what a single A rating is, and what a triple B rating is, and what's a junk bond and whatever. So you need to have some form of standardization of interpretation of the data by an external party, which is what a rating agency does. They look at our balance sheet, they look at our business model, and they say, we think that this is a rating, for us, triple B minus. And everyone understands what that means. At the moment, if someone says, I have a sustainability index of 11, well, what does that mean? And how is that compared to a lot of other people? And how does that compare? Someone says, I'm MSCI, whatever, You can't compare the apple with the apple. You're comparing a fruit salad with a different fruit salad and wondering whether it's a good one or not. So that's the first thing that you need to have. And if you look, everyone, or the big companies are all going to have to start reporting the same data at plus minus the same time. In the same way that you do your financial data now, you're going to have to produce your non-financial data. In 2024, we're all going to have it in there. Will be a combined annual report, double materiality, including not just the financial, but also the non-financial data, and on a standardized basis, and checked and signed off by the auditors. It's going to be fun, but there you go. And then everyone will have a level playing field. then it's easier. But that's 2 years, 3 years, 4 years down the line. By the time people have a track record of comparing the same numbers, that's going to take some time.
Okay, so standardization is one of the things that we have to push forward. Stefan, your thoughts?
The valuation and transparency. So valuation, because I think at the moment it's very difficult for the agencies to either put a rating on a number on it. I work with several different agencies, and they're looking for, I think we discussed it already, for comparables. It's very hard at the moment. Plus, in this region, there's no transparency anyway. You know, what my neighbor does, I don't know. I don't have a clue. I don't know what they're asking for rent. I don't know what their energy consumption is. If you compare that to the UK or other countries, it's very different. For the valuation with RICS, we're working together here locally with the CBA, the Czech Banking Association, to try to come together to find a way to put a stamp on it somehow, saying, okay, this building, you know, has this ESG value, or whatever we want to call it. So you need legislators on the table, you need the agencies, you know, the valuators on the table, you need the developers on the table. So this is what we're organizing now. But just as Richard says, there's 2-3 years down the line. It needs work, yeah.
So valuation and transparency. Patrick?
I also like this standardization. I think it will help as well a lot. So, and if I take it from this construction perspective again, and we will be at the beginning, we will start to really have a standardized product. We will have a prefabricates. We can have really systems which are automatic, so you can produce them much more cheaper, and then also with more sustainable approach. Then in total business case will be positive at the end. So the renewables, changing classical automatic machinery to electricity, it's also, there is a lot of small things which can be done, and at the end, after some time, we will see the result. And I see also our clients really, earlier when they was checking and the banks, when you said so, earlier it was normal, it was just do something with sustainability, it was just a click the box. And now some clients are even interested in that. So this is changing as well. So that it's moving, like this conference is helping to that, but step by step, but it's evolution. It's not revolution that we will do it really in one day.
Omar?
Yeah, good comment. Evolution, not revolution. It seems like that to me as well. I think it's just by examples as to how companies are conducting themselves and how they're actually standing behind their green credentials, what might help the financing market. Because I get a feeling that we're at the beginning, or we're at the early phase of how things are being measured. There are different, we already mentioned that there are different measurement standards out there as to your ESG credentials, which confuses people so they don't know, is this good versus that one. The other thing is that to avoid greenwashing, I think companies need to, or those which are eligible, because not everyone has to report everything, depending on the size and whether you're a listed company, etc. So, you need to stand behind some, this is the pathway that we've adopted, and this is how it's been measured, and this is how it's been audited. And just from my own experience, that's the pathway that we've gone down at CPI. We've got targets to reduce our greenhouse gas emissions by 2030 by 32%. Every year they're audited. It's just not scope 1 and scope 2, scope 1, 2, and 3 as well. And most of your emissions are, as we know, are in the scope 3 bracket. So in terms of how your results have been audited and checked, I think will add some comfort and some transparency as to where you're going and how you're proving that you're getting there, which creates some comfort for those financing those projects. I think they're learning as well. I think the level of expertise on the finance side, they're still kind of probing around in the dark, trying to work out what's the best methodology. And you're asking bankers to start understanding, ventilation systems. I mean, it's a tough call for guys like me who work in real estate to understand heat pumps. Ask someone who's in financing to explain heat pumps to you.
There has to be.
The point I'm making is that the gap in education and technical know-how needs to be bridged. Whether that's with external consultants. So the point I'm trying to make is, if you set a pathway, around carbon or decarbonisation, then how is it measured, and how can you prove that you're doing what you say you're doing? You know.
Perfect. I think, yes, audited credentials are important, that are standardized. I think we are here that at the end, it's a question of being clear about what you do. Everybody will understand in the industry that what you are financing goes to the end. So the means are really there, and they can put it forward. We have just for less than 5 minutes. I don't know if there's any questions already from the audience or in Slido. Yeah.
Hello, I would have a question. My name is Eva Neudertová, working these days for Česká spořitelna Bank. Thank you for the discussion, and I would like to comment two things from Richard and Patrick. Richard, you mentioned that ideal would be to test the pilots within the sustainable and environmental improvements, and then implement what is good. And Patrick, you said that this sustainability is rather evolution than revolution. But my issue is that it seems within the topic of climate changes and adaptation, we don't have this time like evolution, like this millions of years. It seems that we are like eating these carbon budgets. And I have read just the speaker from Tuesday working within United Nations, this climate, head of climate risk, etc. And there is some study saying that these big listed companies will eat the carbon budget like within year 2026. So my comment or question is like, do you think that we have time for slow evolution when we're speaking about standards, because especially in Czech Republic and this Central Europe, we are just slow and behind Europe, especially speaking like energy-wise. So I just wonder, do you think that we can be faster as the big companies, or how we can be faster to help to the market, because we belongs to the biggest and those who can help and change the standards as well. So if you comment it, do you think that we have the time for waiting or piloting? Thank you.
Yeah, thank you. Good question. When the Russians invaded the Ukraine last year, everyone said you're going to run out of energy in Europe. What the Europeans did was they massively reduced their energy consumption. The most sustainable form of energy production is the energy that you never use, because it was never produced in the first place. So the simple thing is, the easy thing for everyone to do is try and reduce the energy that you're using now. That's one of the big benefits of the green lease, because the tenant is obliged to work together with the landlord to reduce their consumption of all types of utilities. And that's the best way and the quickest way to do it. You're not going to find a solution for a building. It takes 2.5 years to build an office. You pilot something in the office, it takes 2.5 years to build. It's going to take you 2.5 years to find out how it works. So you have to have time for those things. But there are things that you can do quicker, sooner, that everyone can do. It's not just the real estate industry. It's everyone else in all of their daily lives. And it worked last year, because suddenly there isn't an energy shortage anymore.
Yeah. Regarding evolution, question how you take it, how long evolution should long. I'm more than 10 years at Skanska, and I'm from the beginning, from day one, there was discussion about it. For me, 10 years we are discussing about sustainability, so I take it like evolution. For someone who jumped on the train 2 years ago, it's maybe for evolution, yeah. So it's faster. But for me, it's quite a long way already. And how much time we have? Yeah, it's a good question. Difficult to say. I don't know. If we have 2 years or 10 or 50.
Any other question from the audience? Yep.
May I have a short question? Can you hear me? Oh, yeah, thank you. My name is Veselin Baliev. I'm working for Cemex Czech Republic. This is a manufacturer of cement and concrete, the bad guys. So my question is, our business is subject of EU ETS, I mean the allowances, carbon O2 allowances. You guys will be subject of the same regulation in 2.5 years from now. Are you working on plans how to fulfill the new obligations that will come, and if yes, what are your plans?
Well, for now, that's something that you have to work on. Unfortunately, the regulator is going to come after all of us at some stage. Yeah, so you try and get ahead of them as much as you can. You guys can go to you and say, let's buy some green cement. Green cement is just cement that's produced by green energy. There's no greener than the other one. It's just the way you power the thing is. Same for green steel. But we will try and keep working on improving overall. And you talk to someone like Stefan, who's a very creative guy, and you come up with ideas of how you can improve. And it's lots and lots of individual small steps, not one big one.
Yeah, and we are for many years already working on that, trying to every step to be better. We started with measurements of CO2, what is necessary for our buildings. So we measured reporting ourselves, comparing year to year what we can do. When we have a new plan, we're discussing about the different usage of materials which are more sustainable. So there is a lot of things ongoing all the way. So I think we will make it on time. We even shortened this period for us. We want to be also neutral, as I said, 45. We want to even 2030, we want to less than 70% down comparing to 2015. We are on 57% today. So yes, it's possible to do, even with CEMEX. I know.
Julian is looking at me with a face. So we have 2 more questions, if you don't mind. Right. The people has endured the hour, so can we please? Thank you, Julian.
Hello, I have a short one. Donatas Ditkus from GND. Are you using EU taxonomy for the assessment of your real estate activities and buildings?
Yes.
Yes.
Together with SFDR, yeah. So it's part of it, for sure.
Maybe you can describe shortly how you do yourself, or what are the most largest challenges in assessing alignment with EU taxonomy?
The question is if we do it largely ourselves?
Yeah.
Yes, yeah.
And CPT, and as well, are you doing that? And what are the main challenges for you, if you have any?
Well,
thank you.
I didn't understand the question. Sorry, I can't.
Me either.
Acoustically. You understood it, but you
yeah. But yes, so within ESG, there is, let's say, an ESG department with very knowledgeable people who are doing it itself. So basically scanning whatever is happening on EU taxonomy level and translating that to the portfolio and to the company, or maybe to the company and the portfolio. Doesn't matter which order that is, but yeah.
And on the CPI webpage, on their annual accounts or management accounts, you'll see they have a page on EU taxonomy. They've selected the economic activities and which of their activities are eligible, and then aligned in terms of turnover, capex, and opex.
Same for us.
Yep. Yeah. So it's reported or disclosed, so you can go on and can have a look at it. So it's been done. Yeah. But then not every companies up here might be required to report on them, but not everybody who's working in the real estate industry or even a real estate owner has to report yet on those matters. But those who are or should be are required by legislation to report should be reporting, yes.
Yeah. It's companies from 250 employees up there currently. Yeah.
Okay, thank you.
I presume, yep, that's still on, good. My name's Chris Dixon. I come from Pedalme, which is a green logistics company based in London. Now, I heard mention of Scope 3 emissions there. Now, from a logistics point of view, i.e. everything that goes on outside your buildings, what drivers are there for you as an industry, if there are, to take responsibility of Scope 3 emissions? Actually, that sounded accusatory. Whose responsibility is it to place upon landlords, constructors, policies on Scope 3
Omar.
Very good question. I don't know whose responsibility it is. I mean, some companies have elected to report their Scope 3 emissions, and I can only give you my own experience. So, and one example within that experience is that the business that I work for has hotels. Yeah, and in the hotels we have laundry coming in, and then we have to work out how much energy was used in washing those sheets, etc. So as part of our procurement policy, when the service provider is appointed, those things have to be disclosed. And actually, I think it's based on some calculation method by looking at the invoice and how much it costs. You can then break it back to work out what your Scope 3 emission was. Now, we've elected, not every company does, to report Scope 3 emissions. So at this stage, I think it seems to be a little bit optional, but we've gone down that road, so we've had to use those procedures and methods to get there. And the famous examples about a table being made and the table coming into the factory and then going out of the factory, again, I suppose it depends who's elected to report on those Scope 3 emissions, but it gets very tricky, I think, and that's why I think a lot of people try and duck and avoid it just now. That's the sense that I get anyway.
So that's it. I already have two heads nodding, and we have to give up. Thank you very much, everybody. It's been quite enlightening. We see the practice. We hear this is going to be recorded, so there's other questions. Probably you can direct it through ISFC to all of us. Thank you very much, everybody.
Thank you. Thank you.
Good. And I thank Raul for the moderation as well. And exactly as expected, that was an amazing panel, I think, with wealth of experience on the stage. And for anyone thinking now, there isn't much gender diversity on this stage, which you could. Exactly, so I would maybe just address that as well. We actually had a female panelist who was one of the first who confirmed, one of the leaders in the industry as well, but unfortunately had to cancel. But we still get a very, very interesting discussion, and I hope you agree. We will now have a slightly shorter break, but then for the price of some interesting questions and answers. And then at 3 p.m., we'll have a very unique discussion with the CEO of the Prague Stock Exchange and Budapest Stock Exchange as well, so with two CEOs. And I think that actually has a lot of potential, and we'll explore what capital markets of the future could look like with sustainability. So thank you once again, and enjoy the break.
Mazars is a leading international audit, tax and advisory firm, fully committed to play its part in creating a fairer and more sustainable world. Our people all over the world are dedicated to helping clients mitigate risks, operate transparently, and grow responsibly, while always keeping the public interest at heart. Now, more than ever, organizations must ensure the actions they take today are the right ones for the future they want to build. Acting now for what's next.
Okay, and welcome back after the break. And we will now move onto the last section of today, which will focus on the capital markets and stock exchanges, and then we'll also move to sustainability reporting and disclosures. Very interesting, a very relevant topic for businesses and for sustainability in business. I see still some people coming in, so I was going to say take your time, but don't take your time and hurry up in. And we can maybe slowly start the section. So I will actually let you introduce the speakers, but I will gladly introduce you. So the next discussion about the stock exchanges and capital markets will be moderated by Corina Murafa from ROSIF, which is Romanian Sustainable Investment and Finance Association. So I'll give you the word, and then you can start.
Thank you very much. Let me just bring my co-panelists on the stage, so we can kick it off. You can, yeah, it's fine. Maybe you can go there.
Where?
Okay, let's do it like that, yeah. Sure. So I'm glad that we are uniting the eastern and the central part of Europe, truly, in this panel. So we really make it the CEE. I'm from Romania, and our panelists for the conversation are from Czech Republic and Hungary. We have with us Peter Koblitz. I hope I pronounced the name correctly. Yes. The CEO of the Prague Stock Exchange, and Richard Weg, the CEO of the Budapest Stock Exchange. To talk with us today for half an hour. Hopefully we're going to make it as engaging, as interactive as we can, TV-style conversation on the role of stock exchanges in promoting and advancing sustainability, because they've been advancing quite some interesting things in their stock exchanges. I wish we had some similar movements in the Romanian stock exchange that we at ROSIF are scrutinizing against ESG performance and compliance and criteria and so on. So without further ado, let me kick it off with Peter. Because I know that at the Prague Stock Exchange, you've just released your ESG guidelines. And if you can share with us a little bit on what impact you hope the guidelines will achieve in the market.
Okay, thank you very much for inviting me, and warm welcome to everybody to Prague. ESG guidelines, yeah, we work on that with EBRD and Deloitte as our partners on this project. It obviously have been initiated by the new rules, which are now approved around the ESG topic. And I would say the major aim, if I would say the major aim is that many companies on markets, especially smaller companies on the market, which is the case of the exchanges in CEE, would have the ESG reporting as an additional expensive and time-consuming load. And what we would like to do is to make this workload for them and cost as little as possible, and being able to fulfill and to comply with the ESG requirements as easy as possible. So what we are trying to help them are these guidelines. We are sometimes nicknaming that as a cookbook, you know, basically how they should follow the rules and regulation and the reporting rules. There will be on our pages some examples, you know, how they can do the report, which I hope going to be self-explanatory, and I hope going to save those companies costs through the whole process.
Do you also have some capacity to assist them, to actually work with them, hold their hands in these processes, which are sometimes complex, as you say? Or do you hope that the document is going to be self-explanatory and that they're going to make it on their own?
Well, you know, we definitely could have some capacity. It's not so much in a time pressure, so that there definitely could be some consultation, you know, from our side. It's not like that we would have a person who would be 100% dedicated, or 2 persons, or whatever team that would be dedicated of helping the companies, you know, to cope with the ESG requirements. I think that's actually the business of the advisors. You know, if there is somebody from the big advisors, being that Deloitte, EY, PwC, you know, that they all have enormous capacities dedicated to ESG, as I find out. I have to say, it's probably, if we have a conference or if we have a project, for me, equally important topic, and this is the pensions in Europe for future, that would be tremendously difficult to receive budget for this. Although I think it is quite important thing. ESG, everybody's coming. Oh, we have a budget to spend. We have the budget to spend. Can we do some project? You know, we have a pile of money. I have to spend it on ESG. So there is definitely a situation where, okay, if there are so much budgets, you know, for the ESG, let's use it for good of the companies, of the users, of the investors. So this is now the time when it's hot, and when we can actually do something and prepare our companies, either us or the advisors, to comply with the regulation.
Let's hope that's going to be the case. Moving to Hungary and to Richard, you at the Budapest Stock Exchange have released similar guidelines a little bit earlier in 2021. What's been the effect so far? Has it driven cost savings, as Peter hopes to achieve here in Prague, or was there a different effect that you've noticed in the Hungarian market?
Well, actually, the core of our strategy as the Budapest Stock Exchange is that we want to help the Hungarian mid-cap companies to start to use the capital markets. And most of our services are according to this principle. And also with sustainability, we used the same principle. We looked at what we can do as a stock exchange to help our issuers, mainly the mid-caps, because the blue-chip companies, they started to report from themselves the sustainability data years before. So those are the ones who can really teach us how to do that properly and in a very good quality. But for the mid-caps, I think we saw that there is a role to play from the stock exchange. And it was confirmed. So yes, we published this ESG guide in 2021, and we received from the companies, from the listed companies, kind of a roadmap, a timeline, according to which they plan to move ahead on this road. And this guideline describes or explains to them different types of roads, types of actions that they can really move ahead. So actually the awareness of this topic, that they at some point they really need to publish more data on non-financial information, was really raised because of this publication of the guide. We then organized some forums and professional meetings. And as also Peter said, I can confirm that the consultancy firms really started to focus, not because of our guide, but it happened more or less at the same time, so it reinforced each other's effort. And for that reason, I think, that we were in a good position to somehow facilitate the sharing of knowledge and raising the awareness of this topic among the listed companies, mainly the mid-caps.
Is there a monitoring system that you put in place to sort of see how's it going, how they're taking the guidelines, if they're genuine in the sort of reporting that they're making, if the reports are accurate, or even if the guidelines are complied with? Do you have some type of system in place, a mechanism?
So it's important that it is not a compulsory rule. It's more like a guideline we are suggesting to do that. And then we ask the issuers to really share with us their time frame, their timeline, what their plans. And then we will check back whether they progress according to it. But it is not because it is compulsory, it's because just for having the knowledge and maybe have discussions around this, if somebody is progressing more quickly or maybe a little bit lagging behind. So it's a useful information for us as well.
And do you publish this information? Do you release it to a wider audience, how companies are progressing against the guidelines? Or do you just keep it to yourselves and then you discuss it internally with the companies, with the listed companies?
First, it's internally. But what is also happening, we have a so-called sustainability committee on the stock exchange, which is comprised of issuers, investors, some regulator, government officials. So it's a good mix of knowledge. And there we can discuss these kind of topics, also related to the guideline and how the different companies facing different problems in the reporting of sustainability data.
Okay, thank you very much. We'll get back to the problems in reporting, because I think that's a pain point that many are struggling with. But I want to get also a bit of a European picture, because I know that Peter is the president of the Federation of EU Stock Exchanges. So I would assume that similar developments have taken place in many other stock exchanges, and the ESG attention everywhere has been growing. Could you give us a little bit of a glimpse of what's going on at European level? Are these efforts aligning? Is there cross-pollination, learning between stock exchanges, between different issuers on different stock exchanges, and so on?
Absolutely. We have in the Federation of European Stock Exchanges, we have a working group. And we are of course focusing on this topic. That's one of the topics where I have a feeling exchanges doesn't compete so much with each other. it's a rather mutual effort, to look what the others are doing and do the similar thing. It is. I don't feel that it is a field where we would compete with each other, to make it more viable or easier or more difficult ESG or more transparent, whatever. Everybody's somehow try to do the best effort, look what the others are doing, try to fulfill the requirements. The same way we are not competing on financial reporting. There is one IFRS, everybody's reporting. We are watching the companies. We are trying to make the information available to our investors. So the ESG is the same way, and therefore, of course, we in the Federation are commenting on all the new rules and regulations which are coming from European Commission. From our point of view, would we think it's reasonable and it's not reasonable? Frankly, I have to say, so far the impact of the ESG and sustainable investment is mostly on the paper. It's like I don't see, and we don't see so many investors who are would be moving from traditional way of investing in order to make money long-term wise. Everybody understand that the ESG is a necessary part of it. So everybody would like to see that the companies they are investing in have ticked off, they have the report, whatever. But I meet through my career, I was on the other side. I was an investment banker, before I joined the exchange, and even now, I probably personally didn't meet the investor. He would be saying to me that their investments, most important thing is the ESG. Yeah, because the investors are here, the pension fund managers are here to make money. So the ESG is like a tick. The tectonic change, which could be in the future. I'm not saying I would love to see it, actually, in the contrary, but the big change would be if there is more ESG agenda into the benchmarks, into the main benchmarks. So far, investors, and vast majority of the investors, and majority of the investors in the world are not passive investors. They are investing by the benchmarks, by the indices. And those indices, okay, there are companies who fulfill their reporting, but they are not constructed as ESG indices. The DAX, the Caron, are still indices as they were 30 years ago.
But climate change is fiduciary risk at the end of the day. If you're taking a look at a long-term horizon of investment and return and so on, if you're going to have stranded assets but short-term gains, then somehow if reporting and accounting doesn't take into account these new metrics, then we're failing to align incentives, because that's what I hear from you, that the incentives are not aligned. The profit maximization not aligned with the ESG standards, if I hear what you're saying. So how can this shift be possible if you're saying that that's the only way of aligning incentives?
The thing is, if it's the shift we want to see, we still are working in some kind of legal status. There is still a rule of law, and rule of law for managers like myself usually we are responsible to our shareholders in order to long-term maximize the profit. That's basically written in all the corporate laws in Europe. I don't have in the corporate law in Czech Republic that I should be climate neutral. I'm responsible for my shareholders to maximize the profit. If that is including that long-term view, I do something positive on the ESG side, fine. But I'm responsible based on the corporate law.
But things are changing for other entities. I was reading an article recently that over half of the national banks now have an explicit mandate to address climate change. So if it got into the mandate of the central bank, then I would imagine that it can move towards corporate law as well.
I didn't see that. I didn't see even slightest intention that there would be somebody changing the German, Czech, or British corporate law, which is 300 years of development of the corporate law, starting from the Roman law, basically, that there would be something soft, which would be saying, okay, there are some cases based on something which is called ESG agenda, where the managers of the company don't have as a main duty to preserve investments and maximize the profit for their shareholders. That would be the biggest change in that would be the change of the capitalism, which I cannot frankly imagine, really. And the same way as the pension fund managers. The pension fund managers, you know, I maybe could have a good feeling that my pension funds do care about the climate change and about those kind of topics. But you know, when I'm deciding, you know, what kind of pension funds I want to see and what is the profitability of my pension funds, I look at the number. You know, is it 6 or 5% of the income?
And up until the number doesn't incorporate in a mathematical way, one way or another, these things that we're talking about, you still are going to look at the number, right?
Of course, everybody looks at the number because that's a final, that's a calculation where your pension is going to be calculated at. You know, it's like, okay, what you can take? You can take part of this money and spend them on something which is, I would say, more green or sustainable investments. This is your decision. But there are actually pension funds on the market, and they are competing with each other. And the competition is, they are all fulfilled ESG requirements. But in the end of the day, they are investing, and the competition is who brings more money to the future pensioners. And I don't really see a chance that this could be dramatically shaken. You have to compare metrics and not soft and hard numbers.
If I may also intervene,
I really wanted to come to your perspective as well, but just to let our audience know that they can also ask questions, and that I'm going to be moving to them. Please, what do you think about all of these things?
There are different dimensions of these questions, of course, and the transition from a more efficient energy production, consumption, and so on. So this whole transition requires a lot of financing, and the financial system has a role to play here, stock exchanges as well. We at the Budapest Stock Exchange think that we would like to take part of it, as big a part as our role in the financing of the economy and the real companies are. So for that, what we can do, we can, of course, accommodate on our trading systems, platforms, green securities. So what happened, we listed a number of green bonds from the government. Hungarian government issued several green securities, corporate bonds. We have several green corporate bonds, and also on the mortgage bond side as well. So this is one part. We try to give them possibility to list, and also the visibility. We would like to increase the visibility of these kind of securities.
And do you think that this progress that you're making is fast enough? I don't know if you were here at the earlier panel, but one of the audience members rose a question to the real estate panel, asking them, okay, you are making these incremental changes, but we're heading towards a climate disaster. You are not moving fast enough, was, I think, essentially the message. With the kind of changes that you're seeing in the world of finance, and particularly with these bonds that you're talking about, do you think that the transition is fast enough for what we need to achieve as society?
It's difficult to say from my position, to be honest, but what I can say is that it is a quite visible change. So 3 years ago, we had 0 green bonds. Today, we have a relatively nice volume of green bonds listed. So I guess this trend will continue with time. So I think, yes, I mean, this is a decent development. Whether it's from a global perspective, if it's enough or not, it is very difficult to say from this position. The second thing what we hear from the issuers is that on the investor meetings a few years ago, suddenly half of the questions started to be related to sustainability, what those companies are planning to do regarding sustainability. So very quickly, from a very niche topic, it became a mainstream topic for the investor meetings for the blue chip companies. So of course they then even more started to focus on it. Or I could mention the Hungarian energy company MOL. In their current and last strategy, the core of their strategy is basically to transform it into a more sustainable company. So they really elevated this question into a C-level, a boardroom, and a strategy, a key strategic thing. So I think that there are very good positive examples as well, when it's not only a theoretical question, it's not only about the nitty-gritty details of how to report one data or another data, but this is the core of an important listed company. So I think you can discuss this topic from very different dimensions, and I think there are some very positive examples in the region as well, if you look at these from this point of view.
So if I hear you correctly, in contrast to what I heard from Peter earlier, that playing within the rules of the game is still playing the game, what you're saying is that, yes, but we've slightly adjusted the rules and that's making progress and we are heading somewhere. So I think it's more like the pessimist versus the optimist in a way in this panel.
This is investor demand, this is regulation, and of course the individual situation, different listed companies. For an oil company, this is crucial to address this very quickly. Maybe in a different industry, it's not that urgent. So I think, yeah, in the current reality, you can say that this is a very important topic now.
Do you see this mainstreaming of sustainability and ESG among your investors community, the ones that you're meeting, or is it rather a novel topic that's being approached more cautionary?
In our part of the world, usually the investors there are three groups of investors. One group are international funds. They are here for 25, 30 years, and there are basically the same names, investing in Hungary, Czech Republic. Those are I don't know, Franklin Templeton, Fidelity, the world, which have some emerging market funds. We are still considered emerging market, obviously, by the index companies. And they either do the active investment or passive investment. So those international, usually majority of investments in our blue chip companies are coming from this part. Then there is, let's say, domestic/regional asset managers who are sitting here. They are more focused. They are more hands-on. There is more cross-border investment between Poland, Czech Republic, Hungary, if you want. 15 years ago, there was almost nothing, that there was very few investments. And then there is retail, and retail is usually domestic. We have very few examples that there will be retail investment from Hungary and Czech Republic, almost nothing, The retail are usually investing either in domestic markets or US, in the big blue chips, in these Microsofts and Googles, whatever. So those are the three groups. Okay, frankly, I meet probably all three groups, maybe not so often as prior to COVID, but all three groups. There is, of course, in the first group, in international funds, there is, of course, ESG agenda, big time on the table. So they are, but they are rather tick off, or they have prohibited sectors. They cannot do utilities, energy utilities, they can do whatever. Of course, all the companies have to have this report. Do they really read it and study it and compare it? Not really. It's tick off. There is a report.
Analysts, we compare lots of reports in the academic world, at least.
Yes, but the financial analyst of the pension fund, they compare the numbers. They know there is an ESG report, fine, is there. Like there is an annual report, is there. Yeah? Local funds, regional funds, certain extent, but much less focused on that. They are much more focused on the financials. You know, they know there is a ESG, but they don't care so much. I'm just saying fact. They don't care so much. Retail, never heard anybody whatsoever asking about ESG. Zero. Zero. Everybody wants to make money.
Thank you.
They don't care at all.
Thank you, Peter. I think it's important to have the grassroots voice and the you know, like realism, pragmatism on the table as well. There's many questions already there and not so much time to answer them. So let's take maybe the one around preparing listed companies to report on CSRD. What are you guys doing about it? Very shortly. Richard and then Peter.
Yeah, so we, as I mentioned, we have a sustainability committee, so this is discussed there. We organize forums where we also discuss together with the issuers. And together we did that for small caps and also non-listed entities. We make a pilot project. We have a small cap SME ESG rating methodology that was developed by EY, and we are running a pilot project for non-listed entities for that. And the reason for that is to really realizing that it is not only the listed companies that will be affected, but also the non-listed ones, because they are also suppliers to multinational companies who will then be required to make a due diligence for the whole value chain. What is the sustainability impact? So that's why we started to work also with non-listed Hungarian SMEs to start to, again, raise the awareness and also try to make kind of methodology, pilot database, and let's see what we could use this experiment in the future.
Okay, thank you.
I would pretty much agree. There is one very important thing for us as a managers of the capital market, as the people who are responsible for capital markets. There should be a level playing field. There has been, you know, I've been a member of the high-level working group, you know, who was tailoring, you know, the 27 people who was trying to kind of change the European capital market regulation a couple of years ago, and there were like CEOs of the big banks and whatever. And there has been a discussion what kind of ESG requirements should be for the listed companies. And I was always getting ballistic. I was like, why listed companies? It should be even more for unlisted companies because they are untransparent a little bit more. You know, listed companies are super transparent. And if they are required to have a report, fine. You know, there was a voice from some, it was a French lady, I don't know, I don't want to quote exactly. And there was like, we as exchanges should show not only which are the green companies, but paint those which are brown and prohibit pension funds to invest in them. And I was like looking, what are you talking about? You know, so the pension funds will sell them, the price will go down, they will be bought by the private family office and somebody who doesn't care at all about ESG. They will stop the report and they will do their chimneys will go off. So it is like important to have a level playing field that also the unlisted companies have the same, if not bigger load of the information than listed companies. This is very important.
Let me take another question from there, which probably is I like Slido for the anonymous questions, honestly. It's probably addressed by one of the Czech audience members. How do you believe that the Prague Stock Exchange can make returns without considering ESG risks and without leveraging the sustainability opportunities?
Yeah, I was reading that 3 times, you know, quite, it's a very complex, you know, I was studying mathematics, but this is still a kind of complicated question to answer because I don't really get it. So it is like...
Do you want me to rephrase it?
Yes, please.
So do you think investors on the Prague Stock Exchange can make money without considering ESG risks?
Yes.
Okay, so that was...
That's what they are doing, actually. So they obviously, you know, if they buy today some... You know, vice versa, you know, there has been 3 years ago, there have been a great IPO of the Czech company. It's a machinery company producing guns. And half of the investors were banned to buy it. This is the company now who is supporting the freedom of Ukraine, sending them guns. I see it completely consistent with the ESG because they are trying to save Europe from totalitarianism. However, some crazy asset managers were prohibited to buy that one. This, I think, completely weird.
Thank you.
And people made money who bought it. Those ones which didn't care about the ESG.
We got it. Thank you, Peter. We are at time, but 43 seconds for one last question there. Please, gentleman in the back, so we can also have some interaction with the audience. Wait just 1 second.
Either
until
speak up or wait for mic.
Yeah, wait for the mic.
Hello, my name is Donatas Ditkus. I'm from GND. My question was on the Slido platform, but I haven't read it, so I will make it loud. What particular benchmarks do you suggest for SFDR Article 9 funds? I know there was a discussion about benchmarks, what they could be, should be, but what particular ones do you suggest?
Peter is yours.
You know, I'm sorry. I'm sorry. I'm the CEO, and that's far too technical for me. We probably had some discussion about the benchmarks, you know, but now commenting what particular benchmarks Article 9 funds.
This is, I can make it.
I know what is it, but yeah. You know, I cannot really elaborate.
Article 9 funds are those funds who have sustainable investment objective. By definition, SFDR specifies what those funds who have sustainable investment objective, this means investing in sustainable assets, it has benchmarked themselves. My question is, against what to benchmark?
How sustainable is sustainable?
Yeah.
I think.
Yeah, the question is good, I think, because we have, as Budapest Stock Exchange and probably for Prague as well, our indices were designed before these regulations. So I think it will be an interesting process how our benchmarks will be aligned with ESG requirements. This is not the fact yet, because as also Peter mentioned, those investors who are right now following these indices don't have a huge demand to transform these indices into sustainability aligned indices. Those ones, the global ones, are using probably the indices of the global index providers which have the specific indices.
And there's super different opinions around the globe about the ESG. Maybe funny story in the end, there has been a European company, which I spoke to CEO on that, and they were the bigger European company, and they were tested by the American, like some California fund, you know, it's usually very much ESG focused. And they were very tested, you know, what kind of, what they do. And they're like, oh, we do this for climate, we are climate neutral, we do everything. And they was doing like, and what you do with this G? I was like, oh, G, fine. You know, yeah, of course, we have 1/3 of our board are currently women and whatever. We have some program of promoting women in our management and whatever, and our corporate governance. I was like, yeah. And what you do about the ethnic minorities? And then he went ballistic. And then he said, like, you know what? We in Europe have quite a bad experience from January 1933 till May 1945 in kind of ethnic differentiation, who ethnicity is on the board. So what do you want me to hear? You know, what do you want to say? I have 3 Jews on the board. I think that didn't really work, no, 50 years ago.
Thank you very much. I think we still need to continue the conversations around these topics. Definitely not now, because opinions are still very, very diverse, as you can see, and that's good because humanity is diverse, and we need to sit together and talk about these things. Thank you very much, gentlemen, Peter, Richard, for your contributions. Thank you also for your questions, and I apologize for running late.
Thank you.
Very good. Okay, and I thank the panelists and Corina for moderating as well. And thank you for very, very insightful, really honest discussion on and sharing your experiences as well. And now, without any delay, we'll move to the last panel of the day, focusing on sustainability performance and ESG indicators and how we can measure performance. So I will ask well, all of you to the stage, but mainly the moderator, Pavla Singlerova, who's the ESG expert and visiting fellow at ISFC, so my colleague who will be moderating the discussion, and I will let Pavla to introduce the panel. Good.
Good afternoon, ladies and gentlemen, and thank you for joining us for this final panel of Day 4 at CEE Sustainable Summit. I'm very honored to share the stage with a couple of esteemed colleagues from Central Europe. So starting with Janka Ružická from Azars. Then we have Eva Pekarkova from Czech. We have Gergely Jančar, pronunciation, from SAP. And then we also have Dr. Helena Nafa from Corvinus University, but she's also a practitioner in asset management space. So the topic of today, as you could have seen, it was the leveraging ESG reporting and rating. And I think it wouldn't be a sustainability conference if we didn't have at least one session on sustainability data and ESG ratings. So this is it. And yes, so I think I would also like to welcome the ones joining us online and encourage everyone to use Slido. We have some questions and theme prepared, but if there's anything you'd like to ask, please get asking on the Slido. Yes, so ESG data, a very big, very broad topic. We're starting with corporates, but we're also going to touch on some of the asset managers. It's a very important topic because what cannot be measured cannot be really managed. So thinking about the current EU regulation that we see, on one hand, we have the CSRD asking corporates to improve their disclosures. On the other hand, we have SFDR asking the financial institutions. And in the middle, we have the taxonomy, which is sort of the dictionary helping us to classify economic activities. So there's a lot that is happening in the space right now. So I guess I would kick it off quite broadly, asking, what is the atmosphere that you see across your organizations and clients around this ESG regulation, and how are people viewing it? Maybe starting with Janka in the consulting space.
Okay. So if I should use only one word, you would be surprised, but it would be relief. And why that's a relief? Because among the people who really follow the ESRS development, and if you remember how wide and detailed the first ESRS standard was before the summer last year when it was proposed to the public consultation, then of course it was really reduced in terms of amount of data and disclosures, and yes, so that's really like the ESG managers in the companies were relieved. But if I would be should be more specific, when working with our clients, there are basically three groups. One's those companies who still think it's kind of joke, or that really like, okay, it's compliance, so once we will be in the scope, my compliance team will fill it in, and or we will pay a fine, so they really don't care. Then there is a second group of companies who were reporting for many, many years, and they just will continue, they will just update their tables, and they're really confident. And then there is a third group, which we as a consultants really love, and that's people and companies I would call enthusiasts, and they really see this new CCRD directive and the new regulations and as opportunity. So I can say that we are even working with companies and clients who are not in the scope, but they really see that this process of collection of data can be really opportunity for them, that they can learn, and they are really enjoying the process. And that's, of course, companies we love to work. So
encouraging to hear. Yeah. Gergely, you work in a very large organization. How about you? What is the atmosphere in SAP?
Yes, so just joining to this, or just continuing what we already heard, if I have to use one word, maybe it would be like that companies are starting to take seriously sustainability reporting, which is good. So I think from this point of view, the impact of the regulation is certainly positive. And I also agree with some parts of the categorization. So again, I agree that there is this enthusiast group. So there are companies who have been practicing sustainability reporting or ESG reporting for a long time. And I think that, for example, the CSRD regulation is not a huge change for them. So if you have been reporting on sustainability for 15 years and you have been getting even just a limited assurance on it for 5-10 years, then it will be just an additional project. Of course, you need to comply with a couple of new indicators. EU taxonomy, I would say that's a bigger change, or that's a bigger step. And I would say that SAP is probably in this enthusiast group. It is in this enthusiast group. So on the group level, even though I am not responsible for the reporting, it will not be a big change for the company. But again, there is this other group of companies who have already started sustainability reporting, and we are working with a lot of companies because, you know, SAP is also like a solution provider. So we are helping companies with our softwares in this, and therefore we have a kind of a sense from the market. And in the CEE region, where I'm focused and where I have my discussions, what I feel is that for many companies, CSRD is very much in the focus, which means for me that it is a challenge for a big number of companies. But I think it will be a positive challenge. And actually, we just had a discussion yesterday with Helena, and we discussed that, you know, there are a lot of companies who started with ESG or sustainability a couple of years ago. And it's, how to say, from a certain point of view, it's easy to start with it, right? Because you can create a strategy if you have the commitment from the company, from the leadership. Also, you can prepare some kind of a report, even a good quality report if you are using a consultant, and it will be there. But if you see that it becomes a compliance topic and you have to comply with the regulation, then you start to really look into your processes and the details and the organization and what is my coverage. Am I really just reporting on my operational sides, or do I really involve all the 40 subsidiaries that I have? And there come the big questions, I think. And this is the real sustainability reporting, or this is where we are getting closer to the real sustainability reporting. And I think that all these new regulations will help this process, not just to do it, but to do it seriously.
And I think you kind of link to the other question that we were discussing. Can you actually make these reports meaningful? Are they just some sort of tick boxes exercise that you have to go through, and now you have to report because you're mandated to do so by the EU? I don't know if anyone cares to comment. How you actually can you actually make these reports business helpful, not just tick the box?
Yeah. From my experience, I believe that not all data were created equal. So we need to offer granularity. We need to offer information that's, you know, requested or required. But at the same time, it can't be overwhelming. We need to strike the balance, because if it's too much, then, you know, you just create white noise and the important disclosures might get lost.
Helena, how about you, looking from the investor point of view?
Right. You're bringing up a very good point. What's the atmosphere around both academia or the asset management industry towards sustainability reporting, or for that matter, how to approach this question? And I think it's very visible that for Western Europe, the US, they have 15 years at least of history going back of developing and enhancing this. And in our part of the world, we're seeing this as a trend in the last 2-3 years. I think the surge in interest was driven by regulation rather than demand from clients. The perception is very different. A lot of people are just trying to cope with the tsunami of regulation that's coming. I think that's a terminology that we've spoken about and heard at this conference. But I think a lot of the market players are saying, well, if we are to do this reporting, if we are to comply, then let's see the value in it, and let's see how we can look at the meaningful KPIs and processes. Because at the end of the day, as we heard from the previous panel, investors are here to make money. How to do it in a way that's meaningful.
And maybe also, again, building up on that, if you go to any ESG conference and ask what is the biggest challenge, I think almost everyone says data. It's always data. But what are sort of the biggest challenges and hurdles to actually implement not just the reporting, make it meaningful, but is it, I don't know, budgets? We've heard a lot today about the resistance from anything that's coming from Brussels. I guess the change is culturally based on which region we are operating. So for you, what are the biggest hurdles in implementing quality ESG reporting and data?
I would say that definitely what helps is support from the top. So really, if this ESG manager or department has full support from the top, the process is much more easier. We are now really experiencing a huge shift how sustainability governance is organized within the companies, while 10 years ago, the sustainability reporting or ESG agenda was sitting at the marketing departments or communication departments, mainly because companies really understood it as a reputational thing. Now they really understand that it's also about competitive advantage, and it can bring more innovation. So we are experiencing a lot of clients where this ESG agenda is moved to directly under the CEO. It's usually called like a strategy department. So here, or also because the non-financial data will have to be published together with financial, sometimes also they move this agenda to the financial department. But the companies or this ESG manager really needs to understand that he needs data, yes, but also he needs to find out like people, or to create his alliance of people, peers who own those data and who will be able and willing to participate. So that's really important. What we are now also experiencing is that this ESRS standard is also only in English, so companies are translating that, and also some definitions are not still clear, and even when you are translating it, you are even creating the new languages, new words, so it's also this what is a challenge.
It is an alphabet soup. I think all of the acronyms that we use today, it does get confusing. What about you, Eva? What were sort of the biggest challenges?
I would agree with what Janka said about strong leadership, strong ESG leadership, definitely. You need someone who has a clear roadmap where we need to go, how we can get there, because it's a massive exercise. CSRD reporting, you can't just go in it and hope to wing it somehow and learn as you go. You need to be prepared for it. So we've sort of stress tested the system this year, the data collection, actually, the whole, system of putting the report together. We've shaved off 1 month from the original deadline to see, how it all works under, more time constraints. But one thing that's kind of like still hanging there, because CSRD is going to hit about 50,000 companies. And there needs to be external assurance. How is that going to work? When everyone, will need to have their disclosures, verified, audited. So I think that, like, the biggest hurdle that we might be facing is actually time. Like, will there be enough time? How do we make, the process work so that we end up with what we need to disclose? It's in the form, how it should be written or reported, and we also get the verification for it, the validation.
Maybe building on this EU, there was a discussion we had with Helena during lunch that all of these rules pretty much apply to European companies. I know there's an initiative of this rules to be adopted in the US-based companies, but when we look at investment portfolios of large funds, the allocation, the geographical allocation, is quite skewed to the US, where a lot of these, for example, these rules will not apply just yet. But I kind of wanted to also pivot it to ESG ratings. If we look at all of the data that we're collecting from corporates, there's so many ESG rating agencies now that collect them in a different bucket and then apply their methodology. And what we get in the end are these ESG ratings. Many of you probably came across with them. We have this big guys, Sustainalytics, MSCI, then we have more niche companies, maybe specializing in like physical risk and so on. But maybe coming to you, Helena, because with your investment background, What are your thoughts on these ESG aggregated ratings? Do you use them in investment decisions? Do you use the ratings or maybe the data below? How do you incorporate it in the investment process?
Right. In this conference, we've spoken about the confusion there is about the different rating agencies, and there was a very strong debate about whether we need to standardize those different rating companies or not. I think it's quite common knowledge now, at least among the participants of this conference, is that we have at least 60 rating agencies, and correlations among these ratings are pretty low. But then again, heterogeneous opinion might have value. And what I see from practice is that the large asset managers would purchase third-party data from ESG raters, use them as inputs, and they would have their own internal rating methodologies. So they're not using it as a black box, but rather to highlight. They go down to the granular data, and they're able to pick the ones that they think are important, that they think are credible, and they are able to verify. Because if you remember, the EU regulation does stipulate that as an asset manager, the responsibility lies with you to verify and do the best effort that you can to make sure that the data you're basing decisions on are valid. So the large asset managers have their internal models, apart from purchasing data from several raters. But the fact that there are rating agencies is very useful for the small asset managers and for individual investors, I believe. And here's the role also of not having just coverage of the large caps, because they are the most transparent that we have on the market. But if we look at global financing and where capital is, it's usually with the SMEs. If we look at who are the largest employers globally, it is the smaller companies. And what about the transparency of those? And I think here we heard some ideas that the regional stock markets are supporting the smaller companies in their transparency and perhaps guiding them to help capital markets see the non-financial type of data that they are looking for.
And while
can I jump in for a second? Because, and it is not related to my current position for SAP, but actually I used to work for ESG and ESG reporting as well in my career. And one of my previous companies, one exercise that we regularly did, it was a listed company, and I can recommend to everybody who is working for listed companies, is that we went to investor relations and asked them to please check, in the list of the investors or the who are in the books, who own shares from that company, just to please screen it, like if there are some ESG funds. And the funny thing was that there were many of them. Like, because I agree with Helena that, of course, they are using their own methodologies. So maybe it will not be, like a fund that has the name of any of these ESG ratings, but still, if it is an ESG fund that invests in the company, it will be in the name. And you can even see like how much is the ESG-related ownership of your company, and that turned out to be a super useful argument, even with discussions with the top management, because these are the things how you can explain to the management how ESG and ESG investment creates or can create value to the company. And even this was one of the topics, by the way, that could reach the board level, which is not always easy to do, or at least 5 years ago it was not super easy to do. And also this a bit connects to what you asked about the valuable data, that yes, this is, by the way, a downside a bit, I think, of old regulations, that we are facing this tsunami of the data, and a lot of them, but finding like which are really the valuable indicators for your performance, and that you can use not only externally, but also internally within the company to drive the ESG agenda. It's not always easy.
I will also follow up what you said, because also I worked as a ECG analyst for ECG funds in the past, as you. So, but I would summarize it that we changed the methodology from like that we were assessing companies to, for example, UN Global Compact principles or some general frameworks. But then it moved to the approach that you really think about what's the most material for that concrete company. So there was a lot of effort put into the discussion and decision what is material for that company, where the risk is. And then only those areas were assessed and evaluated. So not even the sector issues, but for that concrete investing company.
And maybe Eva, from you as working as a company, because you've recently done an exercise where actually you try to find your own ESG rating as a company. How did you go around?
We did that because we knew that, of course, some of the big names, the big rating providers were rating us, but then we came across a really useful sort of aggregate tool that sort of listed all the active sources for our company, and we found rating providers we've never heard of before, and we were not in active communication with them. We didn't know how they collect the data. We didn't even know what kind of data they actually collect, and if they are the middleman between us and the investors, then I believe we should have insights in that. So we've been, I think, quite active in approaching a lot of them to find out what's behind that name, what's in that black box that Helena mentioned. And it has been interesting because I believe that the issue we should mention here definitely is materiality, as was apparent in the previous discussion. Talking about minorities in this country could be kind of a hot topic. So is it really material for us in our geographical region with our history and so on? It might be material for a rating agency. If you don't know that they are looking at this data, how do you report it? And at the same time, as I mentioned before, if you report everything, I mean, not only is that not possible, but if you do that, aren't like important things like falling through the cracks? Are you getting visibility and clarity of the data that you want? So we decided to focus on just select group. We couldn't really approach everybody because that I believe it would be counterproductive.
And were there big discrepancies on how you were rated?
Oh, definitely, yeah. It was mentioned on Monday, the article, aggregate confusion. I think, if you haven't read it, do. It explains, the things brilliantly. And we had the same experience, yeah.
There's an upcoming EU regulation trying to address this black box problem with the ESG raters. I think has to do a lot with the transparency, making sure that the methodologies are available and a company like yours can really go into and see where the data is being collected, because it's not always clear. And they're quite resistant. I know the big ones, they're quite resistant in actually publishing. And you kind of get it because that's their know-how. Why would they give away the methodology? But so there's the
one of the most amazing things I've heard in like a personal communication with one analyst of a major rating provider was that he cannot really tell me how they calculate that score or that indicator because it's kind of sort of their internal threshold. Mm-hmm. That was it. So, how do you work with that?
Yeah, and also we often say that ESG data is a bit more forward-looking, unlike the financial returns, but I worked for an ESG provider for a bit, and I know you collect, there's some dynamic elements, so you collect news, but there's also the sustainability reports, which you know how long it takes you to repair one, and by the time they pick it up and rebalance it, it's already outdated, and their investment decisions based on
it's backward looking,
very much.
You're always looking backwards,
It is, and there was something that was mentioned in the previous panel with regards to screening that was very interesting, and again, Helena touched on this, working in a fund. What are your thoughts on how to integrate sustainability through the tool of screening, especially negative screening, because you sort of limit yourself and you remove these, I guess they're called sin stock, the usual gambling, alcohol, weapons, adult entertainment, and so on. So a lot of companies have a threshold. Companies generating more than 5% revenue from this type of activity are automatically discredited, but we've heard a very good example in the weapons industry, given the invasions. So what are your thoughts as an asset manager and portfolio manager? How do you see this issue?
Yes, well, usually it's not weapons, it's controversial weapons that are banned. but again, there are several strategies to approach your sustainability objectives or just to promote environmental and social characteristics. And Eurosif has very nicely listed or identified 7 different of these strategies. And one of the most popular ones, especially in the US, is the negative screening criteria, which is simply listing a company's affiliation to certain sectors that are considered non-desirable, and then they would be excluded from the universe. And I think if just we're relating to the panelists here, I mean, Ches was classically on the exclusion list of many asset managers, simply for the exposure to the coal industry, or the nuclear part is another question usually, which is controversial among investors. It really depends on individual values of investors. But we are missing the point on leveraging on any company that is seeking improvement, any company that is directing its CapEx, its capital expenditure towards sustainable activities. And one approach which is more engaging is to talk to your investee companies. So being an active investor, being a good steward of your assets means that you want to get more involved. And divestment should be the last resort. First, you should try to engage with your companies.
Georgi, maybe you could comment, since you worked for a large oil company previously. Is there something you were approached by investors in terms of engagement and stewardship by your...
Maybe not directly to this one, but to the screening question, because I think negative screening, yes, so I think it's controversial from many point of view, or from some points of view. But I think there is another one which is like, and actually this is why I like the EU taxonomy, because I think that, for example, what the EU taxonomy brings is a kind of a positive screening, right? Because it's based on a similar, but maybe Helena wouldn't agree with me, approach that lets, take the activities which are positive, which we think they have a positive impact. And of course, if we think right or wrong, that's another question. And then let's try to somehow motivate the financial community to invest in them. And I think that, how to say, that's a kind of a thinking that was very much missing from ESG even many years ago, because the simple ESG, like risk-based approach, left a big room for mixing up strategies and operational impacts. But I think that this thinking that the EU taxonomy brings in can have a positive impact, in my point of view, in reporting. But I don't know if anybody agrees.
I agree with that the taxonomy regulation is inclined to the positive screening. So it lists the activities that are considered sustainable. But there is one big ambiguation left in the regulation, and it is that it's left up to the asset managers to decide how they should approach measurement and identifying sustainability. And ESMA came out yesterday with a clarification, a Q&A, and it left a lot of questions still open. It is up to the investors to decide on a lot of questions, which means that the industry will start to create own approaches, and they will start looking for common best practices. So it is left up to the industry. For example, one important question that is interesting for all of us: how do you handle short selling positions? Yeah, short sales. Does that offset your, let's say, from out of your principal adverse impact, some of your greenhouse gas emission numbers? Does it offset? So we've got some guidance on that to a certain extent it does offset. But a lot of the questions remain open, and I think we will be all looking at each other for best practice.
Maybe just to comment on that, I guess the screening part of the integration is often seen as the moral, right? And the ESG, it's more as a risk-based. So how mixing, it's sometimes not very clear what I deem to be moral, and then it gets mixed with the whole concept of ESG, which is a bit more risk-based framework. But I think one of the questions, going back to some of the ESG data providers, there's so many. I don't know, how how do you even like navigate yourself in picking the right one? Have you tested the data, or how do you select an ESG data provider for your investment process? I don't know who wants to help. Helena or Janka, I don't know if you had clients who you were helping to pick the right providers for data. No.
Well, ESG data providers are, one aspect is the quality of the work they do. The other one is the coverage. So how many companies that they cover which are relevant to your investment universe. And the third thing is the cost of their services, finally. So, I mean, it is a quite important aspect as well. Do you rely more on the costlier third-party services, or do you internally develop this capacity or capability? So this is one important topic.
Interesting.
But if I may, I want to bring up one conflict that I have, and maybe to hear the opinion of the panelists here, is that my problem with the ESG ratings is that they mix the two aspects. You've mentioned the impact on the company, so how does climate risk impact your operations? And I think this is something the companies can relate to. It impacts their cash flow statements, hence the valuations in a very direct way. And the other direction of impact is how do they impact environment and society, and that's an externality. And in economics, externalities get priced in if there is a mechanism for that. So mixing the two is not very ideal. Investors usually would have a goal. What is the portion they want to focus on? And the sense I got from ESG ratings is that pretty much the two are a little bit mixed up.
Would anyone like to comment? This is, I guess, the double materiality. There was a study that says even consumers are confused. If you say ESG, they think it's the impact of the company on the environment, but we see the other way around traditionally.
Yes, from my side, I can just agree, and this is what I kind of already mentioned. Maybe I wouldn't use these words, but I think you are the professional, so probably the words that you are using are the correct ones. I always say that, mixing strategy and risk is not healthy in the ESG ratings, and I think that this is the reason of this whole mix and unclarity in all the ESG rating results, that there is no clear methodology for separating this. And I'm really hopeful that there will be more clarity on this. And again, as I mentioned, for example, for me, the EU taxonomy seems to be a good direction into this one. Like introducing this approach that let's take a look first at what is the main impact of the company, what is the main activity of the company, and then, or actually just one activity or one CapEx project, whatever we want to call. And then when we clarified whether it is positive or negative, then take a look at the risk profile of that activity, because it can still have some risks or additional negative impacts because of which we do not want to go with it. But otherwise, the first step is to decide whether it is good direction or bad direction.
Maybe a short comment. What you said, Paula, that consumers do not perceive this, that also the companies are impacted by certain issues like climate change and so on. So I think that's also the opportunity now for companies to explain that, because of course it's one of the requirements of ESRS to explain this, why it's relevant, why they care. And I read during my career many reports, and I have to say that companies really are quite weak in that. So because they don't want, sometimes they, I think, don't even think about that. That's why they don't describe it. But you can really see when you are reading the report where a company is really explaining, disclosing also the business model, and they are explaining and understanding that this issue is really critical for them. They can have new products, it's opportunity, but also the whole business can be ruined or, because of this. So it's really now also opportunity for companies to disclose it in their reports and to tell that story that consumers will understand, and that will also bring or make consumers more, that they will believe in that, because like when your company is saying like, okay, we care, we are planting the trees, but okay, but when they will really explain in depth like that their business is really in risk because of those issues, those actions will be more trustworthy or uveritelné. Yeah.
Yeah. And when it comes to this reporting, do you reckon you guys are from the corporates? Do they disclose? Do you reckon the pressure comes from the EU, as we said, from the need to actually disclose, or are there companies? I know there's some Nordic companies. They've been doing this for a while, and they just want to appeal maybe to new markets, to new consumers. And so, where do you see that, or maybe what's your reason to start?
Yeah, well, we try to have all our bases covered, basically. So we implemented several frameworks that we use for our reporting. There's GRI, there is SASB, because we expect the ISSB to launch their global reporting standards. We published, last year actually, we published our first TCFD report, which is not a legal requirement. In the UK, you have to, here you don't, but again, we did that sort of reporting exercise precisely because we wanted to see if we can sort of look into the climate risks and see where we are going, how aligned things are with the ESG strategy of the whole company. Worked out quite well. The alignment is good. So there is a lot of things that we try to do to like not be left hanging. To have answers ready if someone asks. Yeah, I'm not saying it's perfect. We're still trying to get there. It's never, yeah. And rating is a double-edged sword in this, because sometimes, as we talked about it, that the different rating providers have different methodologies, and sometimes even the methodology is kind of unclear. It doesn't make sense to try to please everybody, because then you would just that would be just useless and very costly, very, very complex thing to do. Probably wouldn't work anyway. So we try to focus on the material issues. Obviously, we are a utility, so there is a lot of connected with the energy transition, decarbonization, things like that. And in the social and governance, there are KPIs set, there are targets, so we report on them. We try not to get distracted, let's say, with some stuff, because you can't please everybody. And asking about indigenous population in this country, again, that's a question that even if we had like a beautiful policy, is it going to really help investor in their decisions? So you have to balance things, definitely.
And maybe, Georgi, would you like to comment as well? I know SAP has a very good, quite in-depth reporting when it comes to sustainability, and I assume you've done this work prior to all of this regulation coming in. Do you feel more pressure with all the EU regulation, or are you pretty much also ready and for what's coming?
Yes, I think the short answer is a clear yes. So I think the regulation is important, and it's a good baseline, and if it's a pressure, then it's not necessarily a problem unless it's an unnecessary burden. So I think it has to be balanced very well to still keep it reasonable. This is one thing. Also, I think that the role of investors, analysts, and sustainable finance as a topic in general, I see it as very positive, because I think that in the last 10 years, the financial community gave the pressure to the sustainability that was needed after the 2008 financial crisis, to move it out from, from a kind of a ditch, what I always say, but it was in a, like seeking the new direction. But also, I think, reporting based on the regulations and reporting just to the analysts or rating agencies, in my view, cannot be the end goal or the final result. And I think that sustainability reporting has several other necessary, important elements, which maybe just a few companies are doing so far, but it's important. And just let me give 2 examples, and I will try to be quick here. One, which is SAP internal. So like SAP has I think, a sustainability report, an external one with a good content, even though we were even joking a bit like what is changing and what is not. So the data is yes and the text is not, which I don't see a problem because I think you just have to reflect the annual changes in the sustainability report. But SAP's most detailed dashboard about sustainability is always for the employees about several topics, but just one example, which is accessible to all SAP employees, is that every 2 years, I think there is an internal survey about commuting, because, you know, like commuting related, as ridiculous as it might be for chess, like this is an impact, but yes, for SAP, this is some kind of an impact. And there is a huge breakdown for each and every site of globally, like what is the related emission. So I think this is an important communication, even though this is not required by any kind of agencies. And my bigger comment, which relates to the consumer. So I think if we think about ESG reporting, like reporting a GHG value once per year, for me, this cannot be more than just an interim step. So what I think is missing really from sustainability reporting is that if I go to the shop, just to any kind of shop, and I see 2 products, I only see one value today about them, which is the price, right? And this price includes a lot of factors, so it has a huge calculation in the background, but it doesn't include everything. So for example, just to use one example, if I go and want to buy a really bio apple, which is chemical-free, whatever, it will be like even €1-2 nowadays, right? And I can get for the same price even an avocado or a mango, which is not locally sourced like the apple, but it is coming from South America, whatever. But still the only thing that I see is the price. And I think where sustainability should really get is that to every day and in every transaction to be able to give the information about sustainability to the consumers, not only the everyday consumers, but also to business consumers, that whenever they make a decision, they can see the sustainability impact, because the price might be the same for the apple and for the avocado, but maybe the carbon footprint is, I don't know, 15 grams for the apple and 150 for the avocado. And in that position, the consumers would really be able to decide. And actually, I think this will be an even bigger step for the companies. It is very long term. It is not only related to the regulations. I even miss a bit this part, but this transactional somehow sustainability or carbon accounting is very much needed, and I think this can be in reporting an end result, for example. And actually, by the way, this is what is also the vision of SAP, to be able to give this level of granularity in reporting.
Let me add a comment to that, and you're absolutely right. If transparency is key here, because if we have the right information, consumers are able to decide. And the same thing applies for the finance industry, the SFDR regulation, which is about disclosure, and it really doesn't have any qualitative or quantitative metric. You know, how far should we go? To what extent should we be promoting or having sustainability objectives? It's just about being transparent. But still, what company doesn't feel the necessity to improve on its performance if in its SFDR reporting it finds out that it's quite lagging against its peers? So there is a kind of pressure. If you're transparent about it, then you'll be inclined to improve on it and deal with it. And once you have those numbers in front of you, that's instigating some kind of management of that. And that brings us to another issue, is that the bias that the smaller companies are suffering from. I've looked at a lot of data from global companies, and I would estimate that it's right around the size of 10 billion USD of market cap is where I would consider below that companies ultimately having lower ESG performance just because of the size effect. And I've engaged with a company that is about that size. It's a mid-sized company, and looking at what's relevant for them in this region, you see that ESG raters were very strict on a few criteria which were not very relevant to that company. So if we take it a step further, I think investors will be, we're also in a progress in this regard, but also understanding what are the relevant points, and that's why it's important to have your own values reflected in your own ratings.
Do you expect this to maybe change with the regulation coming in? If there's the size bias when it comes to the ratings, do you think that the regulation will help to address these gaps?
No, I think it's with the investors to understand what is the size discount embedded into the ESG ratings. The other dimension, apart from size, is looking at emerging markets versus developed markets. And the latest research directions that we're doing is looking at global data and doing separate results and testings for EM versus DM market players. And there is a split. They are playing in two separate leagues. So how should global investors assess the much lower ratings of emerging market companies? We cannot just chase around the highest performer companies. There are simply not enough investment targets for the amount of ESG money, if you want to call it this way. So the approach is to work together with those companies that have the awareness and are willing to improve and enhance in a meaningful way.
It's interesting. I've heard the same about state-owned companies. So Gazprom, PetroChina, Petrobras would have normally very high ESG rating because they have large departments and resources to report very well. They tick, if it's just a tick box exercise for the rating, they score very well. But we have less than, we have around 3 minutes left. I was wondering if there are any questions from the audience or if we can get the Slido up. I'm aware that we're almost there at the end of the day, so. No? Yep, we have one question here.
Thank you for the honest conversation. The question that I had is related to a research that we recently did at ROSIF in Romania, trying to figure out how well the listed companies disclose matters related to ESG, or how bad they disclose, as we concluded. Even the ones that do disclose their emissions, their waste, etc., they don't seem to be setting a clear and transparent target around performing better, around reducing, publicly communicated. So I was wondering, what are all these ratings valuable for at the end of the day if they don't change the behavior inside the company? If the board doesn't take a decision, okay, so next year we're going to do 3% lower or 3% higher, whatever. It looks to me, at least the data that we've monitored in an earlier stage market than Central Europe, Romania, is that yes, disclosure is improving, but it's not changing target setting at the level of the company. I don't know if Central Europe's experience is different.
From my experience and the work we were doing in ESG Fund, the goal setting was always calculated. That was really assessed and taking into consideration into the final summary evaluation. So yes, it was considered whether it's long-term or short-term goals, how tangible they are, and so on. So I think that most, but I think agencies work with that as that.
I think it's regulation also in the EU, the one that you mentioned, is that non-financial performance indicators are part of the remuneration package and the performance measurement of management. So that's one incentive. The other thing is that we have to be aware that ESG performance takes time. So engaging with a company is usually set 2 to 3 years until you see any results. So let's hope your initiative with the Romanian companies will be fruitful in due time.
But I guess also, would you maybe, if you're an investor and you have SFDR Article 9 fund, you have to year on year lower emissions and so on. Would you say that also the investors of the big funds do put some pressure and engage with their investee companies to do so? Have you ever experienced that, Eva?
We actually did this, yeah, and what really resonated among, let's say, the investor community interested in us was when we had the SBTi targets validated. The near term, long term, or the net zero, it's supposed to happen, I think, this June, July. It's always, you know, a long time when you send in your submission before you actually get your date of target validation, because, you know, it was like a really, really long waiting list. But the near term, or the near targets were validated last year, and that got a lot of attention. Yeah. So I think that, you know, this, because it's like, in a way, it is like a monopoly, the SBTi, but on the other hand, you know, it's supposed to be science-based. Maybe it has more credibility than, you know, different rating agencies. Maybe it's hard to really, you know, read our targets through ratings. So I guess that, you know, SBTi was a way to go, and it really resonated. Yeah.
Perfect. Would anyone else like to comment further? I have some final remarks, because we are running out of time. And networking is starting soon, so no? I guess I would then close the session. Thank you very much. Please join me in thanking our panel for powering through.
And I thank you, Paula, for the moderation as well. And maybe just to wrap up the day number 4. So I do hope you have learned new things. You have met some interesting people. And today we have heard about the EU Green Deal and how to operationalize and how to put the Green Deal into practice. Then we went to CBAM and sustainability models, sustainability integration in business models. We have heard about the real estate and how ESG is integrated in real estate. And then we had a very interesting discussion about the stock exchanges. And we closed with one of the most important topics, or one of the most discussed topics, which is sustainability performance and measuring of ESG performance. So one more day to go. Tomorrow we'll be focusing on sustainability and innovation, which is a very interesting topic. So you are still very much invited. And I think that's pretty much it for today. So I wish you a very nice rest of the day, and hopefully see you tomorrow. Bye.